All right. Good morning, everybody. Welcome back to another episode of The Market Open. It is Thursday, February 20th, 8:47 a.m. Eastern Standard Time, and we've got a stock market to open, and we've got a lot of stuff to discuss. Obviously, Palantir, I know, is on everyone's mind. We're going to start with that as our first topic for the day because Palantir was down 10% yesterday as we got into the market close. Ended up going down another 5% overnight. Currently, the pre-markets is down about 4%. So I've got a lot to say on Palantir. I got a lot of thoughts. Palantir right here at 108.36. And we'll discuss more in terms of what's going on with Palantir, implications of it. Today's market open, I will say, is going to be one of the more interesting ones of 2025 because we have not had a 10 to 15% collapse on Palantir in the velocity that we've had it. I mean, it happened basically in like literally 10 minutes, and it's sustaining itself right now. I'm curious if people step in and buy that dip, or if this one actually continues to go sideways or down. And I think there's implications for both sides on if it could continue the momentum down or sort of reversal. Is this a little bit of a deep seek moment for Palantir, or is the valuation just stretched and the street was looking for any catalyst? So we'll talk about all that stuff. But at 9:30, it's going to be really interesting to see how the street interprets it. Number two, we had a lot of earnings today. So we had Walmart earnings today, which is down 8%. Didn't necessarily do the best in terms of their guidance for profit expectations of 2025. And then we had Alibaba, which actually crushed it. Alibaba now up 70% year to date because they just had a phenomenal earnings. So we'll talk about that. We will obviously recap Grab, which had earnings yesterday. We had a live stream on Grab. Grab right now in the pre-markets is down about 4.68%. It was down about 11% yesterday. My quick thoughts, and then we'll go a lot more deeper into this, is that I think earnings were good, not great. And as a long-term investor, when you have a good, not great earnings, which I'm used to with Robinhood and Palantir back in 2022, 2023, you kind of live with it. And you hope that you eventually get a great earnings and that hope that the company executes. And eventually, if the company executes, you'll probably see the share price reflect that execution. This was a quarter where I think they executed very well. I just think they messed up on a couple of metrics, in particular, their EBITDA margins. Now, when I say messed up, I think they're sandbagging very heavily. And we'll talk about the analyst upgrades that the main three analysts that cover Grab upgraded it today into the $6 range. And they upgraded it because they know they're sandbagging, because it doesn't make any sense, the type of guidance that Grab gave out, given their revenue growth. So we'll talk about that. But if the street gets, bad guidance numbers, the street's going to punish you. And so from that perspective, does it deserve to be down 5%? Yeah. Could I see a reversal back to 530? Yeah. Could I see it tank down to 470? Yeah. And so at 4:30 or at 9:30, we're going to see kind of how the stock reacts, and we'll go deeper from there. SMCI is down about 3.39% right now. SoFi is down about 1%. Rocket Lab's up a little bit in the pre-markets. Robinhood continues to face a bit of a decline, now underneath $59. And then we got Bitcoin right here at 97,458. Bitcoin actually having a little bit of momentum that's better than some of the other crypto assets that have not been the best. VVV, thank you for the $100 super chat. Appreciate you, brother. Thank you for being here. You sent $100 yesterday. I appreciate you sending $100 today. It means the world. Thank you for being here, and thank you for the super chat, and hope you continue to enjoy the show. And I hope all of you guys continue to enjoy the show as we get into it every single day. Bernstein did reiterate their outperform rating on Hood. They said, look, this is stupid. It's going to 100. In fact, it's going to 105. We'll talk more about Hood later. I think this consolidation is very healthy. I think the Palantir consolidation is very healthy. I think a lot of consolidation we're seeing is very healthy, which actually transitions us into Palantir. So let's get into Palantir, and then we will keep going from there. Again, VVV, thank you for the $100 super chat. Very, very kind. Thank you for that super chat this morning. Okay, so let's talk about Palantir. Top level, I think this needs to be said about Palantir before we get into the actual dynamics of what's going on. I think people are becoming very ungrateful. And the reason I think people are becoming very ungrateful is because they got used to Palantir just going up and up and up. And the one day where it faces a 12%, 15% retracement, people are freaking out. Now, I don't mean the majority of you in the chat. I think the majority of you in the chat are pretty, like, you have a good head on your shoulders. You have some common sense, to be honest. And you can recognize that if a stock goes up 400% in a year, 60% year to date, and it's only 6 weeks into the year, when the numbers are good, but it's not like NVIDIA type of numbers. We know that Palantir didn't put up an NVIDIA type of earnings. They put up a really good earnings, but it wasn't like 300, 400% year over year growth, right? It was 36%, which is good. In fact, that was expected. Then yeah, any little headline can take it down if the street is a little bit afraid. We'll talk about what headlines took it down and if I think there's any merit to those headlines. But the point is, it's a high beta stock. And I feel like Palantir got a lot of people into the name when in 2022, 2023, particularly retail investors that were smart enough to see value in it at $10, $15, $20. But you also have to be smart enough to realize, hey, it got expensive, right? It was almost $300 billion of market cap yesterday. Like just anyone can recognize, yeah, when you're pushing Salesforce's market cap with 1/10 of the revenue, and 1/100th of the net income, you're probably going to be susceptible to certain headlines if the stock is already running on momentum, which I think we've been very clear about on the show for the past couple of months. Is this stock is not trading on fundamentals. I think everyone can agree the stock was trading on pure momentum, sentiment, S&P inclusion, NASDAQ inclusion, Doge, yada, yada. Like, you can name all the different types of momentum that it's trading on, but it wasn't the fundamentals. And that's okay, because stocks trade like that sometimes, but also stocks go down because they trade like that sometimes. And so I think in general, the majority of people I talked to yesterday are pretty reasonable and they understand the decline, but you've got some faction of the Palantir community that's actually like upset. And unless you bought at 125, which, I mean, there's nothing to say to you if you bought that high, not because it's bad to buy at that level, but because if you buy something when it's run up that much, you got to be ready to DCA. Like, this is just the sort of universal rule of markets. If you're going to buy high, you got to be ready to buy lower. You didn't catch the bottom at 125. Like, let's just say that, right? And if that's the case, then there has to be some level of sanity when it comes to a stock falling and being ready to DCA if you did buy at those high levels. Now, why did Palantir fall? So there's two reasons. The first reason I think is kind of stupid. The second reason I think is also stupid, but I can understand the interpretation of that reason by the broader market. So the first reason is Trump is cutting the Pentagon's defense budget by 8% over the next 5 years. This headline I think it came out at 3:35 last night, and I go live for the market close at 3:45. So this headline completely shocked me, because as soon as I saw it and I looked at Palantir, we had a pretty nasty decline of 7%, and then it turned into 10%. Now, why is this the stupid reason for Palantir to be down? Trump cutting Pentagon spend means that they're going to have to be more efficient with their spend. And if they're going to have to be more efficient with their spend, I would imagine that they allocate capital in a healthier way. Like, that's the interpretation I have of this. And I also think the justification for the reversal today, if there is a reversal, is that the street wakes up and they realize this is stupid. If the Pentagon, which Shyam Sankar, the CTO of Palantir, has talked about many times, is going to cut the unnecessary spending from the monopsony that is government contracting, then if they're spending less money, they're going to be targeted with the money they spend, especially with Doge. That's not going to let them spend money on BS and just stupid stuff and software that doesn't work. I think that's a catalyst for Palantir. Like, I really do. And so I think what the street did yesterday is that they had no idea if this was good or bad, and they kind of sold and said later we're going to figure out if this is a concern or not. So if there was a reversal today, I think the reversal is primarily based on the fact that the street actually wakes up and they're like, hey, this is not bearish. Like, even if it's not bullish, it's not bearish, but quite frankly, it's probably bullish if the DoD is cutting their budget, and that probably is going to get a little bit more momentum for Palantir long term. So I think there's a lot of reasons to sell off Palantir just from a valuation perspective. This one was not the reason. This one was not the reason that I thought made any sense. Dan Ives right here said this Palantir sell-off is the bears trying to poke holes yet again in a transformational AI story that is getting stronger day by day. More focus on efficiency for the government between Doge and the DoD budget cuts is bullish for Palantir, given where they play in the Beltway. And I think this is not the wrong take. I mean, I don't know if the stock's going to reverse off this take, but this is absolutely correct in my opinion, unless I'm just undereducated about the fact that the Pentagon spends so much money on Palantir, and if they get this 8% budget cut, then it's going to be billions of dollars that doesn't go to Palantir anymore, which I really don't think is the case. But if that's not the case, then I think this is going to be a catalyst for Palantir in terms of it being more efficient for their spend, which is why Dan Ives is comparing this sell-off of Palantir to DeepSeek for NVIDIA. Now, some context here. Why do I think it's not DeepSeek for NVIDIA? Because I don't think it's DeepSeek for NVIDIA. When NVIDIA fell 20%, NVIDIA got really cheap, like really cheap. Palantir falling 15% is not really cheap by any sense of the imagination. Palantir is still a $250 billion market cap. Palantir still has a price to sales of 90. So, like, could it be a dip that you can buy if you're riding the momentum? Yeah. Is it a dip that's like, oh my God, like as long as NVIDIA is going to keep up their revenue growth, you got to get into NVIDIA? It's not that type of feeling, I think, on Palantir, because the stock is still up for, like, when NVIDIA fell 20%, it was down 20% year to date. When Palantir falls 15%, it's still up 45% year to date. And so from that perspective, I don't think that's necessarily the reason for comparing it to DeepSeek, but the metaphorical reason around DeepSeek being a stupid reason for the stock to sell off, that I think Dan Ives is correct about, and that I would agree with. Does that result in a reversal today? We're going to find out at 9:30. Now, the other reason that Palantir sold off, and I think a lot of you guys saw this as well, was a Barron's headline around Alex Karp selling stock. So we talked about this yesterday on the market open. We talked about the 10K because we're investors and we actually look at the 10K. And we saw that Karp was planning to sell 9.95 million shares. And that resulted in about $1.2 billion. Barron's then makes the headline kind of go viral. Barron's, Wall Street Journal, all those business media outlets. And at around 3:30, that's when the headline kind of starts spreading across Twitter and all these other social media platforms. And you couple that with the Pentagon cuts, and people start wondering, wait a second, why should we own this stock if the CEO is going to sell another $1.2 billion of it? And I think that's another reason why the stock ended up taking a little bit of a hit on the after hours yesterday and currently right now in the pre-markets. Now, what is my thoughts on this? And I'm curious what your guys' thoughts are. Let's do a poll right here in the chat. My thoughts on this are pretty consistent with my thoughts on insider selling for a long time. I just don't think it's relevant. Like, now, look, Jensen sold a crap ton of stock last year. Zuck sold a crap ton of stock last year. Vlad sold a crap ton of stock last year. Like, all of these big time CEOs, they sell. Why? Because, it's funny, at the meetup in Palo Alto, there was a guy who was at the meetup. He was the only brown guy who worked in finance instead of tech. All the browns that I met in Palo Alto, I was like, oh, you work in Google, right? They're like, yeah, I work in Google. They said it was shamed. They're like, yeah, I work at Google. I was like, of course you do. Of course you do. No one owns a restaurant or anything. Everyone just fucking works at Google. But the finance guy actually works with high net worth CEOs, and he has a consulting firm that advises them on when to sell and how to sell. So I actually got to pick his brain, and I was just like, so how do you determine what it means to sell a stock? Like, is it like are you thinking of public perception? Are you thinking of if they want to save certain amounts of money for their kids and put it in a trust and all this stuff? And basically he said most of the time those are sitting on so much stock that they try to come up with a structured way to get liquid at a certain amount every year. And yes, they have to deal with the public perception of what that means when you try to get liquid, but at the end of the day, like, you have to get liquid if you're a public CEO. Like, Karp's been holding on to these shares for 20 years. Vlad's been holding on to those shares for 15 years. Zuck's been holding on to those shares for 25 years. So from that perspective, Karp selling $1 billion worth of stock, is that bearish? It can be interpreted as bearish, but if anyone says, okay, well, Karp doesn't believe in Palantir, I just think that's unequivocally false. I think that's more so Karp saying, yeah, I've been holding on to this stock for a while. My stock is trading at 100 times price of sales. If the market's willing to give me liquidity, I'm going to take that opportunity. And whoever wants to buy my shares, you can buy them. That doesn't mean that he's not bearish about the business or he's not going to try to execute. Obviously, we're seeing the growth numbers Palantir is executing. Palantir is executing phenomenally. It's just the market's giving them an insane premium. And that's great for shareholders. But at the end of the day, there are going to be insiders who have very sophisticated financial advisors that try to tell them when it's time to take some profits. Now, ironically, Karp was actually supposed to take profits of $6 billion, and that got reduced to $1.2 billion. So let me put this poll right here in the chat. Do you think Karp selling is a big deal? So actually, it's not as bad as what it seemed. If he was going to go through with the full $6 billion worth of sales, which is what the previous 10K said, I think we probably would have been down even worse because people would have been like really upset. But he ratified that to $1.2 billion. It's up to the market to figure out, is $1.2 billion so much to the point where they get scared of taking a chance on Palantir? And maybe it's just too much. On the other hand, maybe it's not that big of a deal because every insider sells, and if Palantir grows at 40% next quarter, no one's really going to care about Karp selling $1 billion worth of stock. I think insider selling is bad when insiders are using retail or institutions or whatever as liquidity and they're not executing. And I just don't think that's the case for Karp. Not to mention, he's got taxes, he's got other expenses. When you live that type of a life, you've got lots of money that you have to spend in a lot of different areas. Half of that money, or at least 20 to 30% of that $1.2 billion is, going to the government. So it's one of those things where I just don't think that could be the bear case. Now, on Twitter, all the Palantir bears that have been waiting for this day for God knows how long, they've been waiting for a 10% pullback. They're claiming this is the most horrible thing in the world. Karp is dumping, yada, yada. I think a lot of those people own a lot of companies that have also dumped. Those CEOs have dumped shares, and they're just using Palantir as the example because they want the stock to come down. So that's my take on this. I don't think Karp selling or the Pentagon drama is a reason for Palantir to sell off. I think Palantir's valuation was extended, and I could understand, not that it has to come down, but I can understand why it's coming down. And I think the street was searching for any catalyst, even a catalyst that's as ridiculous as the Pentagon is going to get more efficient, therefore they might cut Palantir, which logically just does not make any sense, as a reason to sell off the stock. And that's what we're seeing right now. That is what we are seeing here right now. Where is the poll results? Okay, so 77% of you say no, Karp selling is not a big deal. Okay, so let me ask another question right here. Do you think Palantir rebounds today? Do you think Palantir reverses? Now, one thing I will say is that I know a lot of you guys have very big stakes. I mean, I know people with 1 million shares. I know people with 100,000 shares. I mean, I know people that have a lot of, Palantir. And so if then the stock falls $15, if you have 1 million shares, you're down $15 million. So it can suck, right? You're looking at it and you're just like, holy crap, like this doesn't feel good. But it's also like you're probably up a lot more than what you're down yesterday. And I think, I hate to be cliche and say you got to zoom out, but like, instead of the 1 day on your brokerage, you go to the 1 year or the year to date, because Palantir's still up 45%. And it's one of those things that I think can hopefully calm down some nerves. But I get it. I understand losing 10% of your net worth in a day is not fun. It's just one of those things where you got 400% on your net worth over the past year because of the name. Having a 10% pullback, I don't think is the craziest thing in the world. Someone did buy puts yesterday, though. Yeah, someone yesterday in the morning, they bought a crap ton of puts. Someone always knows. They bought like 600 grand worth of puts, turned it into like 3 million from buying it in the morning. So, I mean, it is what it is. But there's always people that sometimes know there's some issues. Define reversal. I would say back to 125. That's what I mean. I would say recovering that full 10%. 58% of you say no. 41% say yes. It's going to be interesting, bro. We have not had a sell-off of this magnitude since January, and that was kind of a slow sell-off in terms of like when we fell to 63. By the way, OpenAI just hit 400 million weekly users. That's up 33% since December. So OpenAI continuing to excel in terms of their metrics. And this is the first time we've had a real sell-off. And so I'm really curious, at 9:30, do people step in and they say, yeah, this is our dip, this is our opportunity? Or do they say, all right, I'm going to wait till 85 again or 90, And I think we're gonna kind of see how this ends up playing out. CNBC's talking Palantir. All right, let me pull them up. We'll see what they have to say. Also, Grok is now number 1 on the App Store. So even though OpenAI has 400 million weekly active users, Grok is number 1 on the App Store, beating ChatGPT. So Elon's Grok is starting to pick up a lot more momentum with the release of Grok 3.
I believe, Jim, than it is right now. And as you point out, it was the 8% headline. Carl mentioned it at the very top of the show in terms of potential cuts to the defense budget. There are those who obviously argue that the impact would be the opposite, because, of course, more efficiencies conceivably are available when you use Palantir, and therefore it would actually be used more often rather than less at the Pentagon. I'll leave that to you. But I do come back to the valuation itself, which we've talked about so many times, Jim, being, a territory that is extraordinarily high and doesn't seem to allow for a lot of room for error.
Right, and that is the retail component buying. But what you just said at the end, David, is going to be the reason why I think the stock bounced from 106 to 109, which is that perhaps this is the way that Palantir has more business. Dave, we don't know. And I think in a vacuum where we don't know, retail will initially sell, which is what we're happening. But then what's happening? But then we say, hey, maybe it'll come back. And I don't want to say yes or no to it. But, Carl, the thing is so expensive. You can't have anything go wrong.
Well, we talked yesterday about some of the favorites that had popular lawns that were getting reversed. We mentioned AppLovin and Netflix and Spotify and some others. This is one of them.
And I know that there are a bunch of analysts coming out and saying that this is the kind of froth that we should be most worried about. At the same time, I thought there was a piece this morning which talked about how the underowned nature of the Mag 7 by retail. And I think it's rather extraordinary because...
Okay, so, I mean, CNBC's take is relatively simple as well, that the name was extended and it's getting hit on this headline right now. Now, Cramer's saying it's going to bounce back. I mean, I guess we'll see what the market does after Kramer says what he says, but we got Palantir right here at 109.13, down about 2.6%. To me, dude, I slept like a baby last night with Palantir down. I mean, it's not concerning. It's just not. I feel like we have to be humble enough to realize 2024 was a phenomenal year. I mean, my expectations for 2025 was if we can end at 100, I would be really happy. We got to 125, and it's only 6 weeks into the year. Volatility is not like something we can avoid, especially on a high beta stock. There's so much stuff that Trump said yesterday about Russia, Ukraine. We got more tariff stuff. I mean, like, there's so many things that can be affecting this name throughout the rest of the year. It's just something we got to deal with. But I think for all of us that are on the journey together, which we have been for the past 4 years, this is nothing, bro. I mean, like, this cannot be the thing that people are scared about. Like, we've been through a lot more with Palantir than 10% down off of a headline of CARP selling stock and the Pentagon becoming more efficient with their spend. So I just don't think it's the biggest deal in the world. For those who said, am I buying the dip? No, I'm not buying the dip. So again, for me, look, the valuation, even at 110, where it's at right now, is still relatively high. I haven't bought the dip since 65. I have enough Palantir. Don't need to feel aggressive to add it at these levels. I think I want to see how it consolidates as well. If it gets a reversal back to 125, that's great. If it actually shows consolidation at 110, that's fine. If it gets some weakness back down to 80, 90, then I'll kind of reassess. But I don't think anyone needs to be in a hurry to buy the dip either. I mean, I know so many of you have been in this name for so long. Like, buying the dip to buy the dip is just like, if you want to do that, that's fine. But if you don't have a complete position, I can understand wanting to DCA. If you got a position, you're kind of just chilling. It doesn't really have to be that aggressive in terms of, unless the price really gets stupid. And I think at 110, the price hasn't really got stupid yet. It is a very normal 10% pullback that we're seeing here right now on Palantir. Amit, are you getting more hood? No, I'm not getting more hood either. So same thing with Palantir. I'm being pretty patient on hood, dude. I think hood could reverse from here, but I think the hedge funds, the market makers, whatever you want to call them, I think they're not letting hood keep its premium right here. I think they're definitely thinking that hood ran up way too quick, and as a result, they are just consolidating hood for a bit right here, right? I mean, the downgrades we got, I talked about it yesterday, were relatively idiotic to me. Those weren't real downgrades. And now, given momentum's kind of shifting to the downside, along with the fact that we might be going a little bit risk off, which is not the best for Robinhood's trading volumes, and crypto is kind of slowing down a bit. Yeah, I could see a little bit of weakness in hood, but I would take advantage of that when it either breaks the 50 support or gets very close to 50. I'm not doing that at close to 60. It's just like, it's not necessarily something that's needed right here. Bernstein, however, came out today and they said, hey, we are sticking with 105. They said Robinhood has been a phenomenal crypto growth story with record crypto revenues in Q4. 65% of Hood's Q4 revenues are still driven by equities and broader financial services. We believe investors enjoy the Hood crypto beta, but also appreciate its relentless product velocity, which we've got the gold event coming up in March. I'm assuming Vlad's going to come up with some even new stuff within a broader financial ecosystem. Our deep dive into Hood's products and growth initiatives highlights product velocity within equities, strong traction in asset-based revenues, gold program and credit products, and then new growth platforms. Basically saying, hey, Hood's going to be fine, but it might consolidate here, and that's okay. All right, cool. Let's talk about Grab. So Grab had earnings yesterday. Obviously, this is a stock that I am pretty bullish on. My price target has been $10 by 2027. I feel like I've reiterated that many times. However, based on the retail mania that I still don't know how to explain how it happened over Sunday, people are expecting $10 after earnings. And those people, quite frankly, they're probably disappointed. Those people deserve to be disappointed and leave the stock, because I think for the majority of us that are in the Grab community, which is a good 10, 15 of us on Twitter that actually like really talk about it, I think all of us knew that, hey, this was going to be a quarter where we needed to see execution and it would get us back to the trajectory of where we think Grab can go, which for most of us is $7 to $10, $7 by the end of this year, $10 by the end of 2026. And that's what they did. They put up a hell of a quarter. There were a couple metrics that we'll talk about that I didn't like, that I think eventually can be fixed in 2025. But that's what they did. And the stock got punished down 11%. Where are we at right now on Grab in the pre-markets? We're back at 519. All right, so we got a reversal from about 465 to 519. I have no idea at 930 how that's going to hold up. I could see it going back to 475. I could see it gapping back up to 530. We'll talk about the analyst upgrades we got on the name today. But it was a good, not great quarter. And so I'm ready for the stock to either go up or down, because, I mean, it's not one of those quarters. Like Robinhood was a quarter where like that stock deserves to be up 20%. Same thing with Palantir. This one, it definitely doesn't deserve to be up 20%, but it definitely doesn't deserve to be down 20%. So we'll see how the street interprets it. $764 million in revenue. They beat on revenue 17% year over year. $97 million adjusted EBITDA. That's an all-time high. GAAP profitable 2 quarters in a row. I was really happy that they are getting to the point where they can sustain GAAP profitability. Positive adjusted free cash flow. They guided for $3.4 billion of revenue, which is 22% year over year growth. Financial services up 38%. Their loan books up 64%. They bought back 10 million shares, and their monthly active users are now 44 million. That is about 6% of the entire population in Southeast Asia. CEO said fourth quarter was our strongest quarter ever. We finished 2024 with on-demand GMV growth accelerating to 20% year over year as we continue to generate profitability at scale. We have more users on our platform than ever, and our unique platform advantages places us in a strong position to continue this growth momentum into 2025 and to deepen user engagement across our entire ecosystem. So why was Grab down? Well, it's actually very simple, and let me pull up the report right here. Their adjusted EBITDA margins as a percentage of GMV. Remember, Grab is a business that it generates a ton of GMV, which turns into revenue, but then they have to take a certain amount of that GMV to become profit. and that depends on their margins. So if we take a look at this right here, the only reason that I think the street is giving them a little bit of pain, there's actually two reasons, but this one is the first kind of big reason. They're not diluting heavy. They're actually buying back the same amount that they're giving in stock-based comp, so it's kind of a wash. As you can see right here, segment adjusted EBITDA on deliveries is only up 1% year over year. That's not good, right? That needs to go up significantly more because it's showing that you don't have pricing power or you don't have the ability to excel your margins, which is why the Grab GoTo merger is so important, because if they can get rid of some of their competitors, they can stop having a race to the bottom, which is what's happening in Southeast Asia with some of these ride hailing and delivery apps. And so that's only up 1% year over year. And then their segment adjusted EBITDA on mobility is up 19% year over year, 153 versus 128. But the percentage of segment adjusted EBITDA of GMV is down 0.3% year over year at 8.4% versus 8.7%. So you might be thinking this is a little bit nitpicky, and it is. But at the end of the day, investors really want to see these low margin businesses get to higher margin businesses. Financial services is a much higher margin business, but that's still negative on segment adjusted EBITDA, which I think will turn positive by Q3 this year. And as long as they get those margins up, Grab can start getting rid of the narrative that the company doesn't have a moat. Because I'm sympathetic to people saying they don't have a moat because they have this big network, but they can't get the money out of the users, and they're spending way too much money in terms of incentives in partners, consumers, etc., to get people on the app. This is what Uber did back in 2010. They would give you like 10 free rides just to get you to use Uber over Lyft, which meant Uber lost a lot of money for a decade. But once they got everybody onto the platform, you weren't going to leave. I think that's basically what Grab is doing right now. The question is simply how strong can that strategy be over the long term in order for them to win at developing their network effects, which I think they will do. And so that's why I thought the 10% sell-off last night was like a little, just a little bit aggressive for no reason. I understand why investors are mad about that, but I don't think that's a reason to say the thesis is broken. And if anything, you know, guiding for how they're guiding in terms of top line revenue growth, I think that thesis is a lot more intact. And I think the other reason the thesis is a lot more intact is because the street also believes that as well. So take a look at what Citibank said right here. They raised their price target to $625 from $590. And they said, we view fiscal year 2025 EBITDA guidance prudent and in line with the management's previous track record of guiding conservatively at the beginning of the year. That's the only sentence that really matters on this sell side report that came out this morning. Why? Because if you were listening to the call, pretty much every question was, are you sandbagging? Like, we know you're sandbagging. Are you sandbagging? Like, and freaking, and the CEO and the CFO, they're like, you can hear them. They're like kind of laughing. They're like, well, we're assuming some weakness because there's going to be Ramadan and there's going to be holidays. And the analysts are like, Ramadan is not the reason you guys are not going to like hit these numbers. And so I think they're trying to be very conservative with their guidance to beat and raise and sandbag. So to under promise, over deliver. The analysts pretty much figured it out. And literally in that upgrade from Citibank, they're like, we're raising our price target because we kind of know what he's doing here or what the company's doing. And we think their track record, their previous track record of guiding conservatively at the beginning of the year leads us to believe that they are going to beat on adjusted EBITDA guidance, which the street wanted 60%. They came in at 50%, and beat on top line revenue growth, which the street wanted like 23%. They came in at 22%. Most likely than not, they are going to beat. And so that's another reason why we theoretically could see the stock recover if it gets to the point where analysts stop caring about their conservative guidance. Here are the other price targets we got today. So Citi went from 590 to 625. Bank of America went from 510 to 580. And then Barclays went from 550 to 650. You got two banks that are well above $6. And you got one bank that's getting close to $6. Mark Mahaney from Evercore is also at $8. And so I guess we'll see kind of how the name reacts. Ultimately, I am not selling any of my Grab. I am potentially looking to add more. I already have a lot, but if it really gives me a juicy opportunity, I'll get more. But this was not a quarter where I felt concerned about anything. I know a lot of people wanted $10 to, yesterday, and that's not happening, but that's okay. Right. And I think a lot of those people are going to leave the stock, and that's healthy because if you believe it'll be $10 in 2 years, which is not bad, that's a double in 2 years. Everyone's like, hey, Mitt, what's the next Palantir? What's the next Robinhood? I don't know. This is the best thing that I found from my research that can get me a double in 2 years. And if you have options, it can magnify that way beyond a double. And that's why I've consolidated into it. And I like it. But for those that just don't believe in the name, think there's better opportunities, then that is okay to have those opportunities as well and exit the name. Okay, Brett just posted something. Brett, again, I interviewed the CEO of Figure last week. That podcast will be coming out soon. I actually sent him the podcast last night, so he's going to listen to it, and then we'll be good to post it. He just posted a video you guys mentioned in the chat. I'm pulling this up right now. Okay, cool. I've never seen this video. So here we go. Introducing Helix, Our newest AI that thinks like a human. To bring robots into homes, we need a step change in capabilities. Helix can generalize to any household item. All right, here we go. I have not seen this before. Let's take a look at what Helix is.
Hey, Figures, can you come here? Okay, I'd like to try something new. Even though this is the very first time that you've ever seen these items, I'd like you to use your new Helix AI and try to reason through where you think they belong in the scene, and then work together to put them away. Does that sound good?
So it looks like the bots are placing items in a certain area. They don't know what these items are. So these are generalized. They're using a generalized robot AI to figure out what the products are. One robot just gave the other robot something to put into the fridge. Wow. There's an apple left and there's cookies left. That does not go to the fridge. So, oh wow. So the robot knows the cookies don't belong in the fridge, so he's giving it to the other robot. Dude, I can't believe we're living. This is somewhat of the stuff I saw when I was at the factory, guys, which is why my new philosophy is just like, I'm buying Tesla and I don't care, because I think this is very bullish for Tesla. I didn't see this exact demo. I saw a different demo at the factory. This is insane. This is not OpenAI, by the way. This is their new AI. So they created kind of their own foundation model to build this. The robot's putting the apple in the bucket. Wow. Yeah, they completely left ChatGPT. ChatGPT can't do this, dude. GPT is not trained on physical embodiments of AI. I think that's why they were forced to kind of make their own one. Someone said they're going at Congress speed. Object generalization. Dexterous manipulation. One neural network for all tasks and robots. Wow. There you go. Helix, the new figure AI. Let me put this in the chat for anyone who wants to watch this right here. You can go to this right here. He posted some more stuff, so let's read about this. This is very important for Tesla, because we need to. Tesla's not posting these types of videos, so we need to understand what's going on in the humanoid robotic space to get a deeper understanding of if Tesla really is going to dominate this market. So Brett says, we've been working on this project for over a year, aiming to solve general robotics. Like a human, Helix understands speech, reasons through problems, and can grasp any object, all without needing trading or code. In testing, Helix can grab almost any household object. Wow. New scaling for humanoid robotics. Coding your way of this won't work. We simply need a step change in capabilities to scale to a multi-billion unit robot level. To be successful in dynamic environments such as the home, robots must be able to generalize on demand. He's correct about that. I mean, to have a robot in your house, you need to be able to have the robot to be able to generalize any item and understand where it goes. As my uncle says right here in the chat, you have to give it to your mom to get groceries from the car. Yes, when I move out, I will buy my mom a figure robot so that it can get the groceries, but it needs to know what a grocery is, and it needs to know it has to bring it into the house in the first place. Brett says, today we are showing two humanoid robots performing collaborative grocery storage. A single set of Helix neural networks weights run simultaneously on two robots. Then they work together to put away groceries that neither robot has ever seen before. Wow. So Brett is saying the neural nets the robots are trained on have never seen ketchup or cookies or an apple, but because of their AI trained on the proprietary hardware that they built, they can sense if ketchup belongs in a fridge or not. Helix coordinates a 35 DOF action space at 200 hertz, controlling everything from individual finger movements to end effect or trajectories, head gaze, and torso posture. What's truly exciting is that these robots can now generally pick up any household item. For instance, we asked it to pick up the dessert item. Helix identifies the toy cactus, chooses the nearest hand, and executes precise motor capabilities to grasp it securely. Let's watch this because we didn't see this. Pick up the dessert item. Oh, the desert item. Sorry, not dessert, desert. So that's why it's picking up the cactus. Wow. So it can recognize there's a car, there's chains, there's a hat, and then there's a cactus, which represents the desert. And once you say the desert, it should be able to use their own LLMs to make the connection that cactuses usually tend to be in a desert, and then identify that. Helix is a novel architecture, System 1, System 2. System 2 is an internet pre-trained 7 billion parameter VLM. System 1 is a 80 million parameter visual motor policy. Each system runs onboard embedded GPUs. That's NVIDIA, by the way. We talked a lot about NVIDIA on the podcast that you guys will see, making it immediately ready for commercial deployment. Wow. Today, we're launching our first technical report. The report details Helix, a generalist vision language action VLA model. Wow, they put out a full report on this thing. Huh. The humanoid robotic enthusiasts are going to have a field day with this. This is exciting. So why is this really cool? Well, first of all, Tesla has not done anything like this, right? And so I'm sure Tesla's working on stuff like this. Tesla just hasn't unveiled it yet. But because they haven't unveiled it yet, the only thing we can look at is something like a figure. That's the best proxy for kind of what's going on in the broader humanoid robot sector. To me, again, seeing this is phenomenal, but my thesis on this concludes, at least for me, by Tesla. Because if we believe that Figure is going to win in this game, I don't think we're going to believe that Elon's not going to win in this game. And if Elon's not going to win, and Figure might be a little ahead right now, but Tesla's catching up, or maybe Tesla's really ahead and they're just not showing off their stuff. The point is there's going to be 3 to 4 winners, in my opinion. And Figure and Tesla, I think, are going to be up there. Now, Apple's putting their ring in the race. They're trying to get some humanoid investments done. Meta potentially might be investing in Figure. That was a note that came up by Bloomberg last Friday. But I think the point is the car business is irrelevant. The FSD business to me is also irrelevant when we think of the unit economics around bots. It's just Tesla might go to 250 before the thesis plays out. Or Tesla might go to 400 while the thesis is playing out. Like it's just so volatile at this point. I think it's kind of like Bitcoin, right? You buy it at whatever price you buy it and you know it's going to go up in the future and it is what it is. I think same thing with Tesla. It's just a question of when the thesis ends up playing out. So there you go. Pretty exciting stuff by Figure. And outside of the implications on Tesla, to me, the broader implications on the AI market and technology trends is, and this is kind of what I was saying yesterday, although it definitely feels a bit frothy in certain sectors of the market, when you see robots working like that, like when you see robots giving items to each other and generalizing different products that they've never seen before, I mean, it's one of those things where it's like, how can you be bearish against just technology and how it's developing? And the NVIDIA chips that are going to be in these robots, the supply chains that are going to be very important for different manufacturers that are going to make money off building these robots, the fact that robots are going to be building robots eventually, like this is happening. And it's really exciting to ultimately see it happen. The other thing that's really important about this as well is that Brett did tell me when I talked to him that he wants robots to be in the home by the end of 2025. Now, I don't believe him on that. I think he's being really ambitious there. I don't know if robots can be in your house by 2025. I think people are still going to be really scared of having a robot walk around and do the laundry, but he thinks it's possible. Maybe that's a little bit of a very ambitious timeline, in my opinion. But if we get a robot by the end of 2025 in your house doing your laundry, Palantir right here, 106.4, we got 5 minutes until the market opens. Then, I mean, we're making really big progress in terms of the overall robot sector. All right, cool. Yeah, I'm going to have to hire robot bodyguards. Yes, exactly. Figure is not a public company. They are private. I think eventually they will. Yeah, I mean, I'm sure they will IPO eventually in the next 4 or 5 years, but currently right now. But that's the thing, right? Because people can't invest in Figure, I think the proxy is Tesla. And I don't even think the proxy is Google. I know Google invested in Apptronic, which I'm also invested in, and that's awesome for Google. But I think the real proxy is Tesla. It's not Google when it comes to humanoid robotics, because Elon is not Sundar. And I think Elon's actually going to take it to the finish line. But the question is going to be just what the timeline is on when it happens. Going around the pre-markets, SMCI is down 4%, Palantir down 5.4%. We are going to see if people buy this dip as we get into the market open, 105.78. Grab is down 3.75%, recovering a little bit from 465, where it was at last night, right now at 513. It would not surprise me if we tank below 5 again in the market open, or if we gap up to 530 where we were yesterday. Just a question of how the street interpreted those earnings. Bitcoin at 97,000. Nvidia's up about 1%. Bumble's up 0.5%. S&P 500 still at all-time highs. Google down about 1/3%. Amazon down 1%. Amazon's actually getting hit since earnings. So I think people have kind of just been rotating out of Amazon, which it is what it is. I do think there's other parts of the market that people think they want to get into, but if Amazon gets, close to 200, I think it's a very attractive buy. Netflix right here down about 0.03%, Salesforce down 0.7%, and Alibaba's up 10%. Oh yeah, we had a ton of earnings that we didn't even get to talk about. Let's talk about earnings. So Alibaba crushed earnings. For those that are in Alibaba, congrats. I mean, look, China, when Xi Jinping said he's embracing capitalism, which he said a couple days ago, shook hands with Jack Ma, that definitely got the street excited. So Alibaba, they beat on earnings, 293 versus 267, revenue 38.38 billion versus 38.14. Baba at 140 was undervalued. Baba at obviously 50 was undervalued. Baba at 200 is going to be undervalued. These guys have so much cash relative to their market cap. The risk has always been the CCP. But as of now, the street's probably not that upset about the CCP if Xi Jinping is actually embracing China. So if you got to China as a sort of rotation from the United States because it was less expensive, which it is, then you've done very well. Alibaba's up 70% year to date. The stock that's not doing that well in the pre-markets is Walmart. Now, it's only down 5%. At one point, it was down 10%. And Walmart, they beat on EPS 66 versus 65 and revenue 180 billion versus 179. But they missed on their guidance for gross profit expectations in 2025, and that's why the street took them down. Now, granted, Walmart, if I'm not wrong, was up year to date or over the past 1 year, 70%. Walmart doesn't move 70% in a year. So I think this was a little bit more of price for perfection. 2025 is a little bit weaker. I don't think that means there's a problem with the consumer. I just think in general, it's probably a little weaker from where they had initial comps back in 2024. And as a result, Walmart's taking a little bit of a dip. I don't know if that's a buy the dip, but I don't think that's anything problematic for the broader economy that Walmart is taking a little bit of a dip as well. Amazon just passed Walmart in quarterly revenue. Yeah, Walmart used to be beating Amazon, but now Amazon is at the top of the list. Also, we had new initial jobless claims. So let me pull that up real quick. That was a little bit of a nothing burger as well. So initial jobless claims were 219,000. The street wanted 215,000. So about 5,000 more than expected. 1.86 million people are filing for unemployment in the United States versus the market expectations of 1.87. Or sorry, that was within expectations of 1.87. So actually a little bit lower than market expectations. So that jobs data was not that big of a deal. Market's not really reacting to that. And so that was kind of the only big macro data we had this morning. All right, folks, here we go. We've been through a lot together as a Palantir community. This is our first basically 20% decline of 2025. In about 15 seconds, we are going to see if people step in and buy the dip, if this reverses, or if the downside pressure continues on Palantir. Thank you, everybody, for being here. Thursday, February 20th, 9:30 a.m. The stock market is now open. All right, wake your ass up. 102.5 on Palantir. Down 10% yesterday, down 8% today. That is a 20% decline, essentially. Went from 280 billion in market cap to 240. We got 103.2. Kind of trying to hold on to 102. Bottomed at 102.5. I think it hit 101 for a quick second. And I think it's going to take some time to see if there's any green candle that pops up or if we are continuing to head down. Yeah, we are. Yeah, we have 101.08. That was the very low. Now we're here at 102.88 here right now. Someone yesterday said, do we have a reverse bell? I was dying. I was like, that's hilarious. But 103.85. All right, we'll go back to Palantir in a second. Grab opens down 6%, 503. So we are kind of holding 5 right now. We'll see if we drop below 5, but we are down about 6% on Grab. Tesla down about 0.31%. Walmart's down 4%. SMCI, I don't know why SMCI tanked yesterday. It was at 66. I knew the Palantir headline for why it tanked. I don't know why the SMCI, or I don't know what headline took SMCI down, but right here, 58.3, that's down about 3.6%. Cheesecake Factory had a good earnings yesterday. They're down about 1%. SoFi down about 1%. Rocket Lab also was down 7% yesterday. They are at $26 right now, basically flat. Robinhood below 59. That's at 58.92. Hims, which was at 73 yesterday, is at 67.26. That's down 2.7%. MicroStrategy is up about 1.4%. NVIDIA actually green, trying to get back to 140. We got the S&P 500 is down about 0.24%. Celsius down 5% after being up 15% yesterday. Google's down about 0.33%. Amazon's down another 1%. D-Wave, Quantum's up 14%. Microsoft introduced a quantum chip, and that's why the quantum names are getting some love. Microsoft is flat, but D-Wave's getting the benefit from that Microsoft announcement. Palantir, slight reversal at 104.7. Let's see if it can hold those levels, but we are still down about 6.5% on the day. Reddit's down 1.3%. TSM's down 0.5%. Micron's down 0.5%. Vertiv's down 1.68%. Carnival Cruise is down 3%. Royal Caribbean's down 3%. I don't know why the cruise lines are down today, but they are down. CrowdStrike's down about 2%. Airbnb down 0.5%. GameStop's down 0.3%. Coinbase, great earnings, but I guess it moves with Bitcoin, and Bitcoin's been flat, and so Coinbase is down. That's down 1%. And then Uber right here up 0.25%. That is green. Where is Meta? Meta right here is 697. That one is now up 17% year to date. It was at 740. I guess it got a little too frothy at 740. Street took it down right there. Now just below 700. Palantir trying to get back to 105. I mean, bottom was 101.08 so far. We got to see if this is a head fake or if this is legit. People are stepping in and they're not going to let this go too much lower. So let's see how this plays out. Rob, thank you for the $5 super chat. Amit, do you think Karp sold because he knew about the upcoming defense cuts, or was it pure coincidence? So Karp did not sell. That needs to be understood. Karp filed a 10.5B1 plan to eventually sell throughout 2025. The reason he's selling is not because of defense cuts, in my opinion. I think he's selling because he's been in the company for 30 years and needs to occasionally sell, right? So he has not sold yet. He probably will sell throughout the year, but I don't think defense cuts had anything to do with it. I think in general, all insiders take their profits. And that's just another thing we're seeing with Karp right here. Grab holding on to 5, kind of. I mean, it's at 501 right now. I would not be surprised if we dip below and hit the 485 as our support. Down 6.3%, but holding on a little bit right here to 501 on the day. SMCI down about 4.8%. Cisco's flat on the day. Microsoft's a little green. Meta back to 700, even though that's flat on the day. And then Tesla right here down about 1%. Palantir still holding on to 105 here right now. VVV, thank you again for the $250 super chat. You do not need to do that, brother. I appreciate you. You already sent a $100 super chat this morning. So thank you, VVV. Appreciate you. Means a lot. Yeah, and I will use that $250 probably to buy some more Grab, especially if we get below $5. So thank you, VVV. I appreciate that. Triple V. That's what we're going to call you. Triple V. Triple V. Thank you for that. Derek, we already watched the figure video. We watched it. It was insane. It was incredible. We talked about it for the past 15 minutes, and yeah, the robots are coming. The robots are coming. And Derek is kind of aligned with me on Tesla. I mean, we both kind of came to the conclusion that based on what we know about Figure and what we've seen at the factory, Derek also got to visit the factory a couple months ago, that like we know that Tesla's going to do this. And Tesla's going to do this at a scale that is much beyond Figure simply because they're bigger than Figure. So if there's two people really going for it, Tesla and Figure, I think the unit economics on bots are just, they're going to be unbelievable once they take shape. Like I mean, you guys will see in the podcast, it'll hopefully be out by Friday. Brett quite literally said, we will be doing trillions of dollars of revenue. And Elon has said the same, right? Like both of them have realized that the unit economics on this are just incredible. And as a result, those are going to be market caps that I think are unheard of going into the next decade once they end up materializing. SMCI right here down 4%. Palantir now reversing off 105, down 7% right here. It's getting a little bit of weakness. Derek, if you're still in the chat, are you buying Palantir? Because he did call me yesterday and he said, you know what? Palantir's looking a little juicy. So let us know if you are taking advantage of this dip or if you are going to wait until we get to, well, no, he actually said I would wait until it gets to 85.90. But I don't know, dude. Do we really get down another 10% from here? We would have to get down a full 30% then to go back to basically pre-Q4 earnings and give away all of the pump. Which, could that happen? Yeah, but I don't know. We're going to have to see. Put in the chat as well if anyone else is buying the dip. I'll do a poll right here as well and see what you guys are thinking. If anyone is buying this dip. Are you buying the dip? Are you buying the Palantir dip? Oh, wow. Derek said, yes, 100% I'm buying today. Wow. Okay. So Derek is putting his hat in the ring. Now, you guys got to remember, Derek sold a ton of Palantir a long time ago. So he really doesn't have the biggest position. He used to have a big position. So for him, he's more so establishing a position again and DCAing here. All right. So we got Derek saying he's buying The dip, yeah, June, we talked about the jobless claims, kind of was a nothing burger, came below expectation, so it wasn't anything too crazy. Scarlett said, I am buying. Jill said no. Bavak said, I'm buying. Lucas said, I'm still up 120%, even with the dip. Yeah, I think a lot of you guys are probably up 5 to 10x, even with this dip. Yeah, a decent amount. I think it's kind of 50-50 on people buying or not. For me, yeah, I'm not buying this dip. I mean, I want to see if we actually consolidate much below 100. But if we consolidate here at 105, I think that's not bad. I think that's actually very healthy if we can stay at these levels and hold it. But I'm probably not buying this dip, at least not yet. Grab right here, holding a little bit of momentum above 5, even though it's down about 5.2%. Again, Grab got upgraded by Citibank and Barclays into the $6 range. So they didn't really have that big of an issue with earnings. They do believe that they're sandbagging, and eventually they're just going to have to put up the numbers in the sequential quarters to prove that they were sandbagging. D-Wave up 10%. Amazon's down 1%. Google's down 1/3%. Meta 702. Microsoft is actually green. Satya Nadella did an interview yesterday, a new podcast, and he basically said, if we don't get an ROI on this AI stuff, we're going to have some issues. And so he's kind of giving a warning to the broader AI community that like there needs to be an ROI on this CapEx. Now he believes the ROI is coming, but his warning was like, we got to prove that there's an ROI. Otherwise, people are not going to believe that there's really any momentum when it comes to the broader AI trade. And when we see things like the Figure robots doing what they're doing, yeah, I think there is going to be an ROI in certain sectors on this CapEx and on the chips that these robots are going to need to be deployed. Bitcoin right here at 98. All right, so Bitcoin getting some love. Bitcoin has been relatively boring for the past couple of weeks. I think a lot of you would agree. I mean, it's kind of been stuck in this range. I don't think we haven't even broken above 100 in a while. So I don't know. It's kind of one of those trades that hasn't gone up or down. The Bitcoin ETFs have been relatively flat as well. They're not getting a ton of inflows. The biggest ETF that got inflows this year was VOO, to be honest. So a lot of people are just buying the market versus some of the leveraged ETFs that got really exciting for people last year. So Bitcoin right here at 97.9 on the day. Rocket Lab, are we down on Rocket Lab today? We are down 25, down 3%. All right, we got Rocket Lab earnings next week. I have sold puts at 22. I'd be happy to buy those shares if they get assigned to me at 22. But let's see if that ends up playing out. Rocket Lab right here, 25.07, down about 3.2% on the day. SMCI, nice recovery, dude. SMCI trying to go back to 60. I don't know why it fell yesterday from 67. They have 5 days to release their 10K, so hopefully that goes well. And if so, maybe this thing is much above 660 going into the next couple of weeks. SoFi getting hit below 16. I don't know why SoFi keeps struggling at these levels, but it does. There's like no negative headlines in my mind about SoFi. So I don't know. I think it's just shorts, manipulation, something, but it's kind of been stuck in this range. I guess the street's kind of waiting for another quarter as well. You know, SoFi did the same thing when it comes to sandbagging guidance. Like we know Noto constantly is under promising, over delivering, which is good, but maybe the street might want that delivery into Q1, and they're just kind of waiting until that plays out. Baba's up 12%. Yeah, I mean, put in the chat if you own Baba. Put in the chat. I mean, look, the reason I stayed away from Baba is because I just didn't want to deal with the China risk, which for my mental peace, sleeping at night is better knowing I'm not dealing with that type of a risk. But for those that took a chance on it, because obviously it was egregiously undervalued, and the biggest reason that people stayed away from it was the CCP. If you were able to overlook the CCP risk, you're doing very well. I mean, you're up 70% year to date, 141 on Baba. Last time we saw 141 on Baba was, wow, October 2021. Holy crap, dude. Talk about 4 years of just pain in Baba, finally getting rewarded at 142. Yeah, not bad, dude. Not bad. On the poll, 71% of you said no, you're not buying the Palantir dip. See, this is why I think the majority of you guys in the chat are not freaking out about what's going on with Palantir, because, like, in my opinion, this is not a buy the dip, especially if you have a position already. And I think a lot of you have such a heavy position, you don't need to buy the dip. But I have seen some hysteria on Twitter of people freaking out, and it's just like, we got to be a little bit more grateful, dude. The stock's up a lot. It's made a lot of people very wealthy. It's retired a lot of people. It can go down 10%. Like, it is what it is, right? It's just not the worst thing in the world. Decent amount of you guys own Baba. Wow. Decent amount of you guys own Baba. My average cost is 82 in Baba. Mark has some Baba. Valerio sold some of his Baba. Where's FXI? So if Baba's pumping, FXI should be pumping. FXI, yeah, that's up 3%. That's the Chinese large cap ETFs. Tesla right here, still down on the day. Grab holding above $5, not really moving beyond that. SoFi 1569, and then Robinhood I mean, dude, give me 55 at this point on Hood, dude. If they're going to take away our earnings pump after the quarter Vlad put up, give me 55. Like, take it down. I think that's also that's also the sign of like a maturing investor, right? It's like if you're going to give me a dip, like really give me a dip because I'll be ready to buy that. But don't give me close to 60. Like, really take it down. I'm okay if they take away the pump from earnings. I'm not upset about that, but don't half-ass it. Like, let's get some much more attractive prices on Hood. But they got to take it down here. They got to take it down. Oh, Enovix had earnings as well yesterday. Enovix right here is down 3.2%. Enovix generated about $4 million in revenue. I think they're guiding for $5 million in revenue next quarter. Company's worth $2 billion. You might be thinking it's crazy for a company to be doing $5 million in revenue and be worth $2 billion. Nonetheless, a lot of people are buying the potential of Enovix, especially the Silicon Valley a company that they have a deal with, which it's either Apple or Meta. I think it's Meta, to build to build batteries for their headsets. So if you're kind of bullish on the long-term potential of batteries becoming more efficient, then that's kind of the thesis on Enovix. But they are down right here about 3%. Unity had earnings today. I didn't even know Unity had earnings. Wow, 19%. Okay, let me pull up the Unity numbers. Unity is a gaming company. Them and Unreal Engine kind of have a duopoly on the broader gaming market. They got hit badly in 2023 when they started like taking more fees from developers and all that stuff. So they lost 30 cents a share versus 37 cents, and revenue 457 versus 433. That's a beat, up about 20% on a double beat. Okay, not bad. Not bad at all for Unity. What other companies had earnings today? So we talked about Walmart. We talked about Baba. Oh, Wayfair had earnings today. They lost 25 cents a share versus 1 cent. That's bad. 3.12 billion versus 3.07 billion. That's a beat. I would imagine Wayfair is down if they missed that badly on EPS. They are up 1%. Okay, so they're kind of flat. That's a nasty miss, though. 25 cents versus 1 cent. That might be a tax thing or a regulatory fee or something. But they did miss on earnings. Yeah, so we had Unity, we had Wayfair, we had Walmart, and we had Alibaba. Those were pretty much all the earnings that we had here today. For those that didn't see the headline, Grok 3 is now #1 on the App Store, surpassing ChatGPT. I've been using Grok 3 for the past couple of days. I really think it's one of the best LLMs I've ever played with. Archer right here down about 2.29%. So it is surpassing ChatGPT on the App Store for #1. However, ChatGPT just surpassed 400 million weekly active users. So it is definitely growing rapidly, but Grok 3 is not too far behind. And I think from a qualitative perspective, Grok 3 is just a lot better than GPT-4 right now. But OpenAI is coming out with 4.5 eventually. So it's going to be a bidding war for the consumer's attention when it comes to LLMs. Chris says cruise lines are getting hit because of comments by Howard Lutnick, said they are going to tax the cruise lines. Why are they going to tax the cruise lines? Wow, 7% down. Holy crap. Palantir as well, not really getting any momentum above 105, back down to 103. Interesting. Why are they taxing the cruise lines? Is it because the cruise lines do business internationally and they want to have extra taxes from their traveling revenues or something? That is interesting, dude. I didn't even see. I was wondering in the morning why it was down. Nubank is up 1%. The dollar's actually coming down a bit, which is nice. The dollar was at 106.98. If that thing gets to 103, it gets very exciting for Nubank and Mercado Libre. But that one needs to come down a bit more. Where is Grab? Grab's at 501. Yeah, pretty much just holding $5 right here. Hood 57.38. Hood's falling another 3%. This is why I think my intuition was a little bit right yesterday. I didn't want to get eager to jump into the dip. It does not feel like they are going to let us keep that pre-earnings pump. They basically, as soon as it gets to 55, they've taken away pretty much all of the earnings pump, and that's okay. It is what it is. But I don't think they're letting us keep this one. This one was just too fast for the market to sustain it for us. And even with this dump, I mean, Hood's still up 35% year to date, right? Instead of being up 50%. So I think that's still reasonable. NVIDIA right here, 139.43. NVIDIA still holding the 140s pretty nicely. Apple, wow, 245. Looks like that new iPhone SE they introduced is what's getting the street excited, I guess, for whatever reason. But that's up. Shake Shack had earnings today as well. Shack, they are up 13%. Let me see if I can get their numbers, but I imagine they had a pretty good earnings if they are up 13%. Yeah, EPS 26 cents versus 24 cents. Revenue 328 million versus 327. Guidance 1.48 billion. Shake Shack up 13% on the day. Wow, big dump on Tempest. Where is Tempest? Oh yeah, 12% down. Look at that. Huh. Tempest getting a little bit of pain. Mohammed, thank you for the $30 super chat. 2,000 Palantir shares with a $17 cost basis. Thanks to you, Mitt, for your excellent coverage throughout the years. Appreciate you, Mohammed, for that super chat. Thank you for being here. And also, I think there's a lot of people in the chat that are in a similar situation, which is they've got thousands of shares with a cost basis that is well below the current price right now. So I think for a majority of people, they're not freaking out that much. I think the people that are freaking out, like the people on stock twits or on Twitter that are just like so scared and they're running around and just like upset at this is genuinely people who bought in the high 100s, 120s, 115s, 125s. And it's just like, I don't think that's the majority of the retail community, dude. That might be the majority of the new retail community, but that's not the current community that we have right here. We did get an upgrade on Palantir though. Let me bring this up. We have someone who actually outshined Dan Ives when it comes to price targets on Palantir. So let's read that real quick. Loop Capital has a $141 price target on Palantir, and this is kind of the summary of it. But let me just pull this up right here. And they essentially said ignore the valuation. They said valuation doesn't matter. So they said Palantir is building a foundational AI software company, and while the valuation is steep, the market opportunity is too big to ignore. Best strategy, start small, buy on dips, and then they also said hold your nose when it comes to valuation. So look, you may interpret this and be like, oh, well, this is 2021 type of stuff where analysts are saying valuation doesn't matter and just buy it to buy it. You may also be interpreting this as, hey, you've got analysts that really are seeing the potential in Palantir as the true AI operating system, and they don't want to use valuation as the deciding factor to not get into the name. But that is a new street high target on Palantir at 141. Dude, what's going on with SoFi, man? Actually, I don't think it's a SoFi thing because Palantir, Robinhood, SoFi, everything's down. I think this is a market thing. Where's the S&P? Alibaba's still holding on. Yeah, S&P is down 0.5%. Yeah, this is a market thing. Tesla's getting hit down 2%. There you go. Grab just got hit 8%. Yeah, dude. We're getting a bit of a dump across the market. Hood, wow, 5% down. Look at that, dude. Look at that. Yeah, this is the whole market. This is not any individual. Even Nvidia getting hit right here. Celsius getting hit. Amazon, which I don't understand why the street's selling off Amazon. That's just weird to me, especially after those earnings. But Amazon's getting hit. Netflix getting hit. Big Bear AI. Talk about, something that had a lot of momentum falling 10% right here. Why? Because it's speculative. And these spec names will get hit. Apple is green. Market's rotating to a little bit of safety on Apple. Salesforce is down. Intel's down. Wingstop's down. Toast is down 3%. Shift4 is down 2%. Oscar Health actually up a little bit. They had a good earnings a couple weeks ago or a couple days ago. Oklo down another 7% after being down 10% yesterday. This is another very speculative name, so it makes sense. BlackBerry's down 5%. That's also speculative. Next Decade's down 3%. Walgreens down. Broadcom down. And then Palantir 102.45. That is down. Amit, check the link I sent on Twitter. Okay, let me pull it up. Okay, this is Howard Lutnick. All right, let's see. Oh, wow. All right, so I guess someone is trying to abolish the IRS.
And I'm telling you, you watch it, we're going to do it.
If you get savings from these Doge cuts, are you going to give any of this back to the American people? We keep hearing about these Doge dividends.
Well, think about it. Donald Trump announces the External Revenue Service, and his goal is very simple. His goal is to abolish the Internal Revenue Service and let all the outsiders pay. I mean, this is someone who is focused on America. Let's drive down our waste, fraud, and abuse. I'll give you an example. Cruise ships. You ever see a cruise ship with an American flag on the back? They have flags of like Liberia or Panama. None of them pay taxes. None of them pay taxes. Every super tanker, none pays taxes. Alcohol, all foreign alcohol, no taxes. This is going to end under Donald Trump. And those taxes are going to be paid, and Americans' tax rates are going to come down. That's what Donald Trump wants to do. Balance our budget and cut our taxes. I mean, imagine a Democratic senator going against that. What planet are these people?
So the Trump admin is seeking to abolish the IRS, according to Commerce Secretary Howard Lutnick. The statement comes as the Trump admin is expected to lay off thousands of IRS workers. We keep hearing about these Doge dividends. Think about it. Donald Trump announces the External Revenue Service, and his goal is very simple: to abolish the Internal Revenue Service and let all the outsiders pay. I'm a bit skeptical that we are going to abolish the IRS. I think there'll probably be some job cuts at the IRS. There won't be, 87,000 new employees. I don't think we're going to cut income taxes. Palantir right here at 101.92. I don't think we're going to get the rest of the world to fund the United States via tariffs. I personally am a bit skeptical on that. Now, in terms of this Doge dividend, I don't know, dude. They're thinking of like whatever savings they get, they give it back to the people. I don't know what that looks like. I also think I'd rather them not give the money to Americans. I'd rather them just balance the budget and like save money versus pay it out. Because if they pay it back out, eventually it's still kind of an expense. So I don't know, dude. I think that's kind of up in the air in terms of how they're thinking about it. Let me know what you guys think. If you think a Doge dividend is a good idea. I don't know. I mean, like, I wouldn't complain if they gave us a check, but I'm a bit skeptical that that's actually going to happen. Palantir right here, really getting hit, down 9.3%. SoFi down 5%. Grab, there you go, down 10%, 45, kind of falling with the broader market. Tesla as well, 352. SMCI down 6%. Everything's getting hit. Nvidia below 138. Celsius as well. Everything getting hit right here today. Yeah, that's the other thing. If they give us a Doge dividend, wouldn't we have free money to kind of spend? And that would be inflationary, right? I know it's not free money, but you get my point, right? Like, it's basically what happened during COVID with the stimulus. I know they're not printing the money, but it's still giving us a lot of money that we can use, which is like inflationary. Like, if we each have an extra $1,000, we're going to spend it, right? So I kind of, it didn't make a lot of sense to me when I heard the concept of it. But I think it's a headline that people are trying to get out there in the world. What else do we have right here? So we got SMCI at 55, Meta 699, Tesla 351. Where's Palantir? It looks like Palantir wants to go. Yeah, there you go, below 100. There you go. There it is. Wow. We haven't spent much time in the 90s. We really haven't, because on earnings day we were at 83, and then we gapped up to 97, and within 3 minutes of the earnings call we were back at 100. So we didn't really spend much time in the 90s. And, although I was born in 1997 and it was a great year, we as a community, we have not spent any time realistically in the 90s. So I wonder if that happens today, or if we bounce off that and we stay at 100. But I guess we're going to find out. Dude, we need a reverse bell. We need something like that. We need something to like commemorate when the stock takes a hit. We have to see. We got to figure it out. Hood's 55. Damn, dude. All right. So market, this is algorithmic now. This is not Palantir by itself. Quite frankly, the 10% decline in Palantir, I'm starting to think it wasn't because of Trump. It wasn't because of CARP selling. It was because the market knew today was going to be a day where people take profits. Now, what's the headline for people taking profits? I have no idea. Outside of the fact that second half of February tends to suck for the markets historically. And so, it's continuing that thesis of sucking. But everything's taking a crap right here. Wow, Palantir looking like it's about to go below 99. There you go, below 99. Below 99. 98.84 on Palantir. Baba's up. China's up. That's your kind of hedge today. China got the rotation. What else got the rotation? Let me go to Berkshire Hathaway. Is Berkshire Hathaway green? Is Buffett green today? Buffett is flat, which is better than most stocks. Coca-Cola, are we getting value stocks going green? Coca-Cola is down 0.5%. American Express, that one's down about 1.2%. UNH, United Healthcare, that one's down 0.84. Where's the Dow Jones? The Dow Jones, which is kind of like the safer ETF across the big ones, is down 0.5%, which is not as bad as the NASDAQ. Is the NASDAQ down 1%? The NASDAQ is down 0.8%, almost down 1%. All right, we're getting some red. Look, I mean, I don't think anyone can really be that upset. We had a really good 6 weeks. We're getting some volatility. It is what it is. I think it's actually kind of healthy. It felt like markets were getting very frothy over the past couple of weeks. We can all see that with meme coins. And as much as I love the run on Robinhood and Palantir, I also think it happened very quickly. And like at some point, those consolidate a bit. And so it is what it is. And we're getting some of that volatility coming up at the second half of February right here. Microsoft and Apple are up. Yeah. So market getting a little bit safer for Microsoft, which I understand. Also, that quantum thing is probably a catalyst. And then when in doubt, buy Apple, right? Well, Apple just went red. But in general, the market tends to go to the most safest names when things get this bad. I don't think Apple's safe at a 40 PE, but I guess the market feels at least Apple can buy back their stock a lot cheaper. Hood now below 56 at 55.90. Nubank is down. Yeah, these are algos though, because when everything goes down this aggressively, wow, Rocket Lab, dude, holy crap, 23.99. Looks like those 22s are coming up for me. Yeah, when you get this type of volatility, these are algos that come in and just take some profits. Now we got to see where the bottom is, or if there is a bottom. It's at almost 10 a.m. We'll see if we'll know when there's a bottom. We'll see a little bit of a V shape across the entire market if there is a bottom today. Eventually, I think the selling will stop, but the question is going to be how long does it take for it to kind of reverse? Palantir right here, 97.5. Now Palantir is down 23% in 2 days. Yeah, that's red. That is indeed red. Are you buying more Hood or Rocket Lab? No, not yet. Not yet. I mean, look, on a day like this when it's this bad, I think it's okay to be patient and just see kind of how things play out. And with Hood, usually I'm not that patient on Hood. Usually I just buy the dip on Hood. But I don't know, there was this kind of like a gut feeling I had yesterday. I'm like, I don't think they're going to let us just reverse back to 65 that easily. So let's just see how this plays out. Palantir 96 continues to go down from 97 to 96. Amit, would you sell Palantir if Carp left? I definitely would not be comfortable holding on to Palantir if Carp left. I think there is a key man risk there. Part of my thesis really has to do with Alex Carp. So yeah, I mean, I don't know if I would sell the whole position, but I would definitely not be that excited to add to it if Carp left. The good thing is I don't think Carp's ever leaving. He eats, sleeps, and breeds Palantir. So I don't think he's necessarily stepping down anytime soon. NVIDIA 137, Celsius 2535, Google 185, Amazon 222, Mag 7 outside of Apple are getting hit. Amazon down 2%, NVIDIA down 2%, Tesla down 3%, Google down 1.2%, Microsoft flat, and then Apple flat. So Microsoft and Apple green, while the rest of these are getting hit. So I did talk to Steve. I called Steve yesterday on the Grab earnings call at the end. I talked to Steve, and Steve's take actually might be interesting to some people. Obviously, Steve doesn't agree with the valuation on Palantir, so he thinks Palantir should have a bit of a retracement. However, Steve said that the Pentagon reason was not the reason Palantir should be down. And so he's like, although I think Palantir is overvalued, I do not think the Pentagon cutting their budget is why Palantir deserves to take a dip. And quite frankly, 14% down after 10% down yesterday, this is not because of the Pentagon, guys. Like this is because the market wanted to start selling off assets, particularly risk-on assets, which Palantir at this valuation is obviously a risk-on asset. And so I guess they used that headline yesterday as a mechanism to get here, but nonetheless, we are here and we are down. This is just reality. Yeah, I agree. I 1000% agree. Hood volumes are about to go up while AUC is going to come down. Yeah, people are going to be people are selling so much on Hood right now, but they're at least getting some trading volumes. All right, so let's do this in the chat. How much are you down today? I'm opening up my portfolio for the first time. Haven't looked at it all day. I'm expecting like $40,000 down, 52,000. All right, we're down 52,000, baby. Now it's 53,000. There you go. Put in the chat. How much are you down? Just remember, it is a privilege to be down so much money because it means at least you had some of that money before, even if it was on an electronic screen. All right, let's see. Let's get some loss porn here. Sam's down 55K. Mithlesh is down 25K. Josiah's down 10%. Gene's down 4K. Alex is down 58,000. Edmund's down 1.2 million. Okay, that's a lot of money. Brandon's down 7,000. Christopher's down 120,000. Kim's down 50,000. Dude, imagine someone random got into the stream right now. And they're like, this guy is like just eagerly saying how much money people are losing right now. Matt's down 7,000. Tim's down 66,000. Eeyore's down 22,000. Alberto's down 16,000. Elton's down 150,000. Sankofa's down 90,000. Adam's down 250,000. What a privilege. That is correct. You got to remember, if you're gonna have the days where you're up 50,000, you got to be able to have the days where you're down 50,000. I mean, that is the sort of beauty of equity markets, right? If you're going to take a chance with your capital, you got to be ready for it to go all the way up and all the way down. Vin is down 100,000. Angel's down 110,000. All right, we got some pretty nasty portfolios here today. Some pretty nasty portfolios. Rich says I'm down 350,000 from Christmas. Yeah, I mean, I could imagine that. Definitely portfolios are getting hit since Christmas. Now, granted, we are still way above where we were at. Like our Christmas Robinhood was at like 37. We're at 55, right? So it's not at 65 anymore, but it is still up pretty nicely from the end of December. SoFi right here looks like it wants to go below 15. This is the day to sell puts. I mean, when you sell puts, you wait for red days to get good premiums. The question is just, making sure that those puts are not being sold into a sort of meaningful decline, right? This is a nasty decline, but it's not really that. It's not like 5-10% correction across the entire market, even if individual names are down 5%. But if the S&P falls 5%, individual names will be down 20 to 30%. And so it's just a question on timing when the best premiums will be for when these stocks take a hit. Carnival Cruise down 8%, Archer down 6%, and Novix down 5%. Rocket Lab 2412, that's down 7%, recovering a little bit from 2387. Tesla down 3%, Grab's down 10%, SMCI is down 5%, Cisco is down 0.5%. Uber actually flat. Uber not doing too bad. And then Dutch Bros as well, down 1.4%. Palantir 9812, rebounding a little bit from 9580 from a couple minutes ago. Ben is down 50K. Dennis is down 120,000. Yeah, pretty much everyone is down. What is the news to warrant this market movement? I don't really think there's news to warrant this type of decline. I just think like it got frothy. And there's certain parts of the market that really did get frothy. Or I'm missing it, dude. Is there any headline? Like, let me pull up some other websites real quick. There might be, I don't know, maybe I'm missing. I don't know if it's what Trump said yesterday. I don't think it has to do with the tariff stuff. I really just think it's a bit frothy. That's it. I don't think there's any crazy. There's not the jobs report. I don't think there's anything too crazy on the headline. Trump uncertainty. Yeah, but what did he say yesterday that would cause that much uncertainty, right? It's not like he said anything that different from what he's been saying. Unless I don't know, unless there was something unique that the street's thinking of this morning that they didn't see from yesterday. The Zelensky stuff. Yeah, but I don't know if that, the market didn't move on that yesterday. I get maybe the market's moving on that today. For those that are missing context, he called Zelensky a dictator and basically said that Zelensky is robbing the American public. I don't know if that's enough to take the markets down 10%. I mean, that's a controversial statement and you can think what you want about it, but I don't know if that's necessarily taking the markets down 10% right here. Midwest is down 300,000. Oh boy. Dude, I feel like everyone's down like at least 50 to 100. Well, now instead of down 53, I'm down 48. So we're getting a little bit. There's a little bit of that V shape on Hood, a little bit of that V shape on Palantir. So what time? 95.80. That was at 10:02. Let's see if 10:02 a.m. Eastern was the bottom. Yeah, same thing on SoFi. 10:02, 15:06. See, this is what I love about markets, dude. Like literally, they move in unison with each other, and it's so crazy. SoFi V shape at 10:02. Palantir V shape at 10:02. Hood V-shape at 10:02. We'll probably have a V-shape on Tesla. Tesla at 10:02 was at 348. Now at 10:06, it's at 351. Like, if that doesn't prove how algorithmically driven these equities are and how many high frequency trading algorithms will go up and down in unison, I don't know what else proves that. I mean, for everything to bottom and top at the exact same time, it's just, it's like, it's quite beautiful, quite frankly, to see stuff like that. I mean, it's just, it's like Mozart playing the piano or something. It's like this like perfection of how markets move up and down together. It's like kind of crazy, bro. It's kind of crazy to see how that plays out. But that's what we're seeing here right now. Where's AMD? Is AMD up? AMD's holding on. AMD. Wow, AMD. It did bottom at 10:02 like everything else at 113, but now AMD goes green. AMD's been hit pretty badly though the past couple weeks, so makes sense that AMD's down. Natalia says it's not Mozart, it's called a scam. It's called the markets are rigged. That's what it's called. Holy crap, I just got a screenshot. I just got a screenshot of someone who's down a lot of money. Oh my God, dude. If that person is watching right now, let me know if I'm allowed to say this number. Oh my goodness. Holy crap, dude. Okay, I'm just going to say it. It's Derek. I'm not going to say the number, but it's Derek. Derek just sent me how much he's down. Holy fuck, dude. Derek, let me know if I can say this. It's up to you. I'm not going to say it without your permission, but yeah, that's it. That's a big dude. 50,000. I'm complaining about 50,000, dude. I don't even want it. I feel sick to my stomach saying this number. I literally feel sick to my stomach saying this number. I'm not going to say it. Oh my God. Yeah, Derek's down 7.53 cents. Dude, that is that. Yeah, I would just say don't feel bad if you're down a little bit of money today. Holy crap, bro. I mean, see, if you are a little bit more high net worth and you're in the markets, these types of days are also pretty bad, dude, because like even if you're down 5% or 10%, which like that's a normal correction, right? But that's like on a lot of money. That's like a lot of money that goes down too. Where's Hims? Is Hims holding on? Hims 6. Hims is actually, I mean, it's down 10%, but dude, it's holding up. It's holding up, even though it was down, even though it was at 72 yesterday. Derek tomorrow's. So we are actually raising cash for my startup now. Oh my gosh, bro. Yo, this is ugly. This is definitely ugly, dude. This is freaking ugly. Let's just say it's more than a couple million. Let's just say that it's more than a couple million. You get to the point where you have to be used to these swings. Yeah, that's true. I mean, look, if you're down a couple million or a couple 100,000 or 10,000, one day you will be up that same amount. You know what's so funny? I remember the first time I back in 2023 when we used to do Finance Junkies, the podcast, and I was talking to Kris, and Kris did a trade on Weight Watchers. And that trade on Weight Watchers was like, he made like, I think like 15,000 in a day. That's when Weight Watchers was like $2 and it bounced up to like $10 and he had some option on it. And I was like, Kris, how do you feel, dude? You're up like 15,000 in a day. Like, that's crazy, right? And Kris was just like, no, it's whatever. It's 15,000, right? And I didn't understand it at the time. I was like, how could you, like, it's $15,000 that you're like, that's a lot of money, bro. What are you talking about? That's insane. And then you kind of go through the motions of it, and you continue to build conviction and all that stuff, and you make some trades, and you realize, like, one day you could be up 15,000, right? And one day you could be down 15,000. And so I've had the days where I'm up 15,000, had the days where I'm down 15,000, and quite frankly, you get desensitized to it. And I know a lot of you guys have had that experience as well, where if you've been in Palantir, if you've been in Hood, you've seen some of these names go up. You've been in options on a SoFi from $7, now it's at 15. Like, you've seen like just crazy. You've seen people's salary times 5 in a day. But as cool as that is, the downside is also there. And I think so many people are afraid of the downside. And they're excited for the being up 50,000 in a day that they can't stomach the down 50,000. And it just leads to people never getting into the markets. But long term, I think eventually you get desensitized to that. Yeah, you get desensitized, and you move on from it. I think my dad has got desensitized to it as well. Before, when his portfolio would be down a couple thousand, he would like legit get mad. And now he's up $1,000 on Nvidia because he bought 50 shares on the dip. And I was really proud of him because you're supposed to buy on a dip, right? Especially when it's an egregious dip on a phenomenal company. And he did it, and he didn't get upset when Nvidia fell to 120. He bought it. So I think just everyone matures eventually, and you realize that life has ups and downs, and the stock market is no different. It's just internet numbers, correct? It is literally just internet numbers. That is also tied to our net worth. So, someone said, "Can we ring the bell again for Palantir when it gets to 100?" Are we allowed to do that? Are we allowed to ring the bell when it gets back to 100 and celebrate, even though we'll only be down 10.3% instead of 13%? Yo, did anyone have puts? Did anyone have puts on this market? Did anyone buy any puts over the past couple of weeks or something? Because they would be printing right now if you did. Nebus trapped, Nebus drop, Nebus. This one's been hyped up the past couple of weeks. Yeah, that's down 12%. Bob was holding on. Bob is the only one holding on within all this red. Where's Grab? Are we still getting hit on Grab? We are still getting hit, down about 9%. Nvidia 137 as well. All right, let's see how the suits are covering it. Let's see how the suit. I would imagine CNBC has red all over the screen, and they're probably trying to figure out what's happening here. Okay, let's see. Oh, we do have some updates on Doge and Trump. All right, so they're covering that. Let's take a little bit of a look at that, and then we'll keep going. Trump did talk in Miami yesterday. He said a bunch of stuff about Doge, so we'll take a look at that as well. A decent amount of you had puts. Wow. Yeah, ton of you guys had some S&P puts, Palantir puts, AMD puts. Austin has a TQQQ put. Oh, TQQQ should be down like what, 3% right now? TQQQ, yeah, 2.7%. All right. So for those that had puts, I mean, they are printing today. Not bad. Okay, I got permission to say it. Are you ready? You guys ready? Here we go. You guys ready to hear it? Okay, it's a lot of money. 90 million. So 90 million, that's well, so for those that are down 15% right now, or 20%, or 50,000, $90 million. That is just a little bit of money. All right, here we go.
Yeah. We're still holding. I mean, I think people are saying even above 5,900, you're still kind of in that zone of a rounding error toward the highs.
Meantime, let's turn to Washington. From Doge checks to tax cuts, another busy 24 hours when it comes to the president's comments about policy and the economy, plus some new headlines on Ukraine. Let's get to Eamon Javers in D.C. with the latest. Morning, Eamon.
Yeah, good morning to you, Carl. Let's start with this AP headline on Ukraine that just crossed the wire. This is potentially worth keeping an eye on. The Associated Press reporting within just the past couple of minutes that a news conference between President Zelensky and Donald Trump's Ukraine envoy has been canceled in Kyiv, and that is at the U.S. request. Now, that cancellation of the news conference comes after a day in which President Trump sharply criticized President Volodymyr Zelensky of Ukraine, calling him a dictator and falsely suggesting that Ukraine was the country that started the war, when, of course, in fact, it was Russia's invasion of Ukraine which started the war. So that's something to keep an eye on in terms of the disintegrating relationship between the United States and Ukraine and what that means for European security and for Russian territorial advance. But let's go back to the comments that the president made yesterday, because President Trump said he's considering Elon Musk's idea to give 20% of any savings from his Doge effort back to the American people in a direct refund. He also suggested an additional 20% of that savings could be used to pay down U.S. debt. Now, on a per-person basis, that's not going to amount to an enormous amount of money in checks to individuals, but federal checks from Trump could make the program much more popular with voters, but even as it lessens the program's impact on the deficit. So we'll have to watch that one. And without providing any details, Trump also said that the Doge effort has found more than $55 billion in savings, that coming even though outside estimates suggest the number so far anyway is much lower. Trump said Doge's efforts will boost the economy.
We're ending trillions of dollars in waste, and it'll mean much lower inflation, lower interest rates, lower payments on mortgages, credit cards, car loans, and much higher stock markets. I think the stock market's going to be great.
And the president also touted his upcoming tax cut efforts, saying he wants to include 100% expensing for new factory construction in the United States. And he added lumber to the list of products that he expects to impose tariffs on relatively soon, although he didn't give a specific date for that. So a lot to watch here, Carl. Back over to you.
I don't know if the Trump comments yesterday about lumber and taxes is actually the reason why we're down right now. I really don't. I don't think that's the reason. Again, Trump has said a lot of this stuff already over the past couple of weeks. So I just think the market wanted a reason to sell things off, bro. That's it. Grab down 8%, Palantir. So we get so 1002 officially is the bottom so far during the day. Palantir going back to 100. 1002, 95.80 on Palantir. Grab also 478 bottomed at 1002. It's just crazy how in sync every stock moves with each other. Nvidia bottomed at 136.79 at 1002. HIMS was at 59.60 at 1002. So far at 1002 a.m., we bottomed. And the question is, can we hold that 1002 as a bottom, or does it continue to get a little bit of a reversal there? At today's bottom, yes. Let me clarify. Today's bottom, not the broader market bottom. But I guess we're gonna see. Yeah, guys, I'm not lying about 90 million. I'm looking at the screenshot right here. I'll read the exact number. It's $90,185,176.23. It's wild, right? It's like, it's a decent amount of money, bro. That's like, that's what I'm saying. Sometimes when you see those numbers, you're like, oh, I'm down 20,000. It's like, oh, wow. Sucks, but it's just, now granted, again, imagine when you're up that much, right? So I think it becomes unemotional, but it still does kind of suck to lose 90 million. But I think you get a bit desensitized when you're up hundreds of millions at the same time. But it is what it is, dude. The one thing I've learned over the past 2 years of just building this YouTube channel and meeting a lot of people, building this brand, is there are very rich people in the world. There are very rich people. I think we undermine how rich certain people are on this planet. And the fact that when you've made a lot of money and you're a true investor and you invest your money, look, if all your money's in real estate and the housing market crashes, yeah, your property is going to lose value and you're going to be down on paper a lot of money as well. If you choose to play in the markets instead of real estate, yeah, it's just a bit more volatile than real estate, but the swings of it can take it down. And so I would imagine over the past couple of years, people that are super, super high net worth and they're in the markets, they're up hundreds of millions, if not billions of dollars, because 2023, 2024 has been an exceptional year for everybody. But that means when you get some volatility on February 20th of 2025, yeah, it'll take away some of those gains as well. Palantir back above 100, holding on to that level so far, but bottom right here at 1002 on the day. Is this no, this is a paper loss. Yeah, it is. The one thing I've also learned about very wealthy people, they don't sell, bro. They don't sell. They're not going to realize the loss. They're not going to realize the gains. They're going to find a way to just be liquid in other ways than having to sell their equities. And that's true, not only just about stocks, but about real estate and art that they might have in their home. Like, wealthy people do not sell their assets. They borrow against them, which maybe there's loopholes in the regulatory frameworks around tax codes that can be changed over time about that. But most people don't sell unless they're legit taking a loss to offset their gains. But usually it's not one of those things where you take profits or you sell to show losses. You kind of just borrow against those assets. They hold through and buy the. Yeah, that's another thing, bro. That's another thing I learned talking to some of these people over the past couple of years. It's like they freaking buy the dip. Now, that doesn't mean you buy the dip today. That doesn't mean things can get worse. But the point is, when things are bloody, They buy. A, because they have the money to buy, right? And you got to get to a certain point in life where you have that disposable income to continue buying the dip. But B, because like, where else are you going to put your money, bro? Like, assets are the place where you get financial freedom from. It's either you own your own business, or you have assets. Those are the two ways to get to financial freedom, right? You gotta have some level of equity outside of a salary, whether it's your own business or your own real estate properties, your own stock market portfolio, something that is able to create wealth or to create a level of financial independence outside of wealth. That's why the rich get richer, 100%. That's why the rich get richer. Yeah. So okay. So we're getting a little bit of momentum right here across the market. Palantir now 101.2. It was down 14%. Now it's down 9%. Grab as well, trying to get back to $5. Baba still holding up. Tesla 353. That was at 348. Nvidia as well. So far, I mean, look, we'll see if the 1030 slam continues to exist. Okay, he just texted me again. So remember, he was down 90 million. Now he's up 30 million. So he's only down 60 million. Dude, that's fucking crazy, bro. It's just crazy. Like, this is the thing that, so I was down 53,000 and now I am down 27,000. This is why markets are wild, bro. This is why markets are wild. Like, within minutes, your whole portfolio can change. That 1002 bottom marked, at least for today, the bottom. And now I imagine a lot of your portfolios are not down as much as they were when I asked the question 20 minutes ago. You can only do this in markets, though, right? You can only, like, this is where this stuff happens. This is where this stuff happens. My grab options are actually up, dude. I mean, they're down, but they're not, like, I'm still green on that. I thought I was going to get hit badly on these options. They're green. I'm still up a decent amount on them. Yesterday I was up a lot. But they're still holding on. Okay, Reddit's back to 179. Reddit, so I bought Reddit at 164. I think this thing needs to come back to the 150s, but we'll see if that happens. My Reddit covered calls, could I buy them back? Let's see if I'm up on them. Yeah, I could buy my Reddit covered calls back. I'm up 1,500 on them. I could buy them back. I could free up those shares. I might do that. I have them for 300 a couple years out. I might end up buying those back. We'll see. But Reddit's multiple also got pretty aggressive over the past couple days. Could this be a dead cat bounce? Yeah, it could. I mean, it could. First of all, I don't think any of us still know why we saw the volatility we saw at 10:02, like why things fell. I don't think it was the Trump tariff stuff. I don't think it was the Pentagon budget cuts. I think it was just algos, to be honest. Jay Powell didn't say anything. The Fed minutes were a nothing burger. Jobless claims were a nothing burger. So this reversal seems logical because there wasn't a reason for it to go down that much. But is the reversal a dead cat bounce? I guess the coming hours are gonna let us know if that's happening. Did you buy the hood dip? I did not buy the hood dip. I did not buy the hood dip. My grab options are still green. Yeah, it looks like. I mean, dude, grab. So I just got two reports from the person I get these sell side reports from. I got Morgan Stanley and Bank of America. We'll read them later near the end of the show, but they're both on grab and both of them gave a price target upgrade. Morgan Stanley's at 550 and Bank of America's at 580. So we'll read them later in the show, but I don't think grab had a bad quarter, dude. I really don't. I think they were low on guidance, but if they're sandbagging, then that was not a bad quarter. Now, granted, I still think 10 in 2 years. I know people want 10 tomorrow, but like, I just don't think that's going to happen, right? But I don't think they deserve to go down below $4. United Health down 1%, Tesla down 2%, Apple still green, Microsoft green, and then Palantir holding on to 101.16 here right now. It's Walmart. You think Walmart's the reason why the market tanked? I know their guidance was soft. I don't know if it was soft enough to tank the whole market 10%. That feels a bit aggressive as well. Oh, is Carvana down? Carvana had earnings yesterday too. CVNA. They are down 13%. Okay, so Carvana's taking a little bit of a hit here as well. Amid is the 10-year going down at 4.5 meaningful. Ian, thank you for the super chat. Yes, the 10-year going down below 4.5 would matter. The 10-year is down on the day, but that's not really having an impact on the markets right now. I'm surprised it's down. I thought it would actually be up a little bit with the tariff stuff, but I think, again, the markets are calling BS on a lot of the tariff discussion. Palantir right here, 101.2, NVIDIA 138. Yeah, so markets are kind of normalizing from this 1002 drop, even though they are still down on the day. Now, here's the thing, right? Is this a buy the dip? And I don't know, but this is where if you think it's definitely stupid, right? This collapse, then you buy this dip. If not, then I think I think it could be a dead cat bounce, right? And you kind of just hold on and wait to really get confirmation that things are bad. Also, we're going to be doing Technical Tuesday today with Jason. So we didn't get to do it Technical Thursday. We didn't get to do it on Tuesday, but he'll be back today. So we'll get his perspective technically on where the market's shaking out, what he thinks is going on. Let's get Scott Bessent. He's on Bloomberg talking about Doge and the value of it. So let's get him for a couple minutes and then we'll keep going from there.
The Doge program, let's talk about it. You've called it one of the most important audits to government ever. You remember that Clinton tried something similar, the National Partnership for Reinventing Government. How different will this be? And what kind of cost savings are you and the team thinking about?
Yeah, and John, I can go all the way back. Given my tenure in the business, I can go all the way back to the 80s to the Grace Commission. And they had some great ideas, most of them not implemented. I think that the Clinton-Gore initiative, I think a lot of that was academics. So this is people on the ground, all areas of government, and it's moving quickly. And I really do think it's unfortunate that it's been lampooned and attacked the way it has. But when it's being attacked like this, it tells me that there are a lot of entrenched interest in terms of, when you're moving people's cheese, they don't like it. And it's not their cheese, it's the American people's cheese.
Well, how about putting some of that cheese back into American people's pockets? How inflationary would those $5,000 potential Doge checks be that the president spoke about yesterday?
Well, I think, again, that if we are bringing down energy prices, if we are cutting the regulation. So I think that it's to quote the vice president during the campaign, I think it's holistic. And I think that it's all kind of one mosaic. If you were to inject a lot of money into the economy, because, Anne-Marie, think about this, that we are at this massive deficit to GDP, 6.7, almost 7%. So what will be happening on one side? You'll be bringing down that spending in the economy. So, very easy mental model is every 300 billion is about 1% of GDP. So every 300 billion that Doge is able to save, could you put that back in the economy into people's pockets?
All right, so that's Bessent on Doge. Let's get one of our favorite analysts on the show, Kris Patel, to get his thoughts. Kris, good morning.
Good morning, man. Very, very interesting day in the markets.
What is your raw take on why we're seeing this volatility?
If I had to guess, I would say that the market is looking at certain earnings and reading that as a barometer for what's actually happening. So one of the major ones, in my opinion, is Walmart, right? So Walmart basically said, hey, listen, we might have some challenges, especially with everything that's going on between Mexico and Canada. And people are kind of in the market is maybe waking up to the idea, like, wait a second, maybe fighting the entire planet economically is not a good idea for businesses, especially American businesses. So that's one thing that could be causing it. The other thing is, the economy works in a very fun way where money gets printed, sent to the people, it churns in the economy, the dollar moves its way around, right? So it goes from the people that the government buys goods and services, pays people, all that money gets churned around. And that's what keeps the economy going, right? Like that's how the GDP keeps growing every year, right? More money comes into the system and we spend it. And usually it's just the government's job to pull the lever up and down a little bit. The challenge is right now that we have gotten ourselves into a lot of debt and we definitely need to reduce our deficit. the challenge that we're running into is this is like a shock to the system, right? This Doge thing is a good idea for long term for the United States, but in the short term, we may be feeling some pain. And I don't know how bad of a painful process that we're going to have to go through. We could even end up in a recession. There's no guarantee that we're not, So I think this is where the people in charge have to kind of like balance things out. And so you kind of have to do half of your stuff as pro-growth, and then at the same time, cut back on government spending. So the key here is get waste, fraud, and abuse out of the system, because they essentially provide no value to anyone, right? So if you're just paying someone to sit there, that's, not really adding to the economy. That's kind of a waste. But if that person was laid off from the government, goes to work in the private sector and provides labor and services there, that could actually end up growing things. So right now, I think the Elon team is going through the systems and saying, okay, where's all the waste that we can reduce? And if we can reduce down the waste, we can bring more confidence into the system and get people to buy more treasuries. And if people buy, especially at the long end, buy more treasuries, interest rates go down, and there you go. Now you've got yourself the disinflation that I think the Trump admin wants to use as a feather on its cap. The problem is, if they do it too much, they could actually end up crashing the economy. And then you got a bigger problem, which is now the entire market is down, and a lot of people's savings and retirements and everything else are in the market. So now how do you answer to that? And then you end up having to go into the midterms with being down on the economy. So I don't know. It's a very interesting process. In my opinion, this is great for traders because this volatility is where people can make a crap ton of money up and down.
Yeah. Okay, so Walmart earnings, you're saying, created a precedent where the broader markets, like Trump is fighting the rest of the world with all this tariff stuff. Walmart's affected by that because of their international supply chains. And you think that's the reason the market's thinking we should get a bit more risk off? Is that the argument?
Yeah, I mean, Walmart generally is, to me, when I look at Walmart, I see that as the barometer for the country, right? It's one of the largest employers in the entire in the country. It's got businesses overseas. It's got interests in our region. So whenever people see like Walmart taking a hit, and people are going to say, like, wait a second, maybe the consumer is not as healthy. Maybe there's actually things happening at the consumer level and at the economy level that we should be wary of. And instead of being in the market when it's super frothy, like you said, maybe it's time to take some chips off the table, while the volatility, because I mean, that's the other thing too. Like people don't exactly, and the markets don't exactly like volatility.
That is
like, I'm not a fan of volatility because I don't actively trade.
Yeah.
People who actively trade love volatility because they have 10% down moves and 10% up moves. But if you're an investor, the market, you don't want uncertainty. You kind of just want like nice 1-2% like up and to the right per week kind of deals, right? And I would prefer that. I'd prefer a nice.
Well, let me ask this question: Do you think we needed a 10% decline like we're seeing right now in some individual names because people's expectations got way too high given 2024?
Could be. There could be. I mean, there's also some regulatory. There's a lot of changes that are coming from a policy perspective that is not good because businesses tend to have to adapt to that, and that adaptation process tends to take time, energy, effort, and valuation, right? So as an example, they're trying to redo the tax situation right now, right? So there's going to be a budgetary, like the taxes this year, they're going to be trying to extend the 2017 tax cuts, which is good. But there's going to be provisions in that might be changing things around a little bit. This whole tariff thing, they're supposed to go in, get implemented in April, and then they're getting pushed back, and then it's not. And businesses can't deal with that volatility. When you're trying to plan a business out 5-6 months ahead of time, you're like, okay, I'm going to order this from China. And all of a sudden now you got a guy come in and say, oh, you got to pay 25% tariff on it. How do you adjust as a business? It's a friggin' pain in the ass. And then you pick a fight with Mexico, and now you have consumers in Mexico boycotting your shit So now all of a sudden you're like, wait a second, what the hell? Like, I have production of goods and services that I already, paid for. They're sitting in my warehouse, and now the Canadians are boycotting. And then you have the same thing with the Mexicans, and then he's starting to pick fights with the Europeans, and now the Europeans are like, all right, well, you know what? We can't trust the Americans because these guys basically are just telling us we're pieces of shit. So all of this stuff that he's doing, I don't know if this is part of the deal, but in my opinion, I don't know, man.
What do you think of this Doge dividend idea?
I think it's dumb. Until you pay down the national debt to the point where it's something that's manageable long term, I don't think there should be any money going to the people unless the economy slows down to the point where people are losing jobs and stuff. And then you could probably, the economy could use some stimulus. But the economy's fine right now. Like, there's no need to add to the expectations. And if this is some kind of ploy to buy votes, bro, it's not going to work. It's not.
Yeah. Okay, so Palantir. I thought you think it's expensive. I know you've been keeping up with the Doge progress. Do you think it has a serious retracement, or do you think momentum keeps it higher? Like, how are you interpreting the 15% decline?
Valuation wise, me, I thought the valuation was high, even at the 30s and the 40s, just based on, the software multiples and the revenue that these guys are having at the growth rate that they're having. Now, the market feels differently. The market feels like they've got an endless cycle of growth ahead of them, and they do have a government business. So, that's one of the things that people are saying, well, maybe I don't need to give it as big of a multiple. And then there's a general feeling that maybe AI could also not be as, great as we want it to be. I think there was some commentary by Satya Nadella that might have thrown a little bit of a monkey wrench into the whole conversation, which is, look, they're spending all this money on CapEx. When are you actually going to see that money flowing back into the companies? Like, when is that ROI coming in? Right.
Yeah.
So it's one thing to spend a whole bunch of money on, training AI models. But the question is, when is that money or what's the total ROIC on that money? And when is it coming back into the spending? So,
do you think that the Mag 7, I know you think the Mag 7 are kind of cheap, but are they a place of safety when there's this type of volatility, or do people dump that as well?
It depends on which ones you're talking about, right? Like, Google, in my opinion, is a value play. So there's some safety that's there. Like, it's trading at 20 PE, which is why I'm in it. Amazon's another place to be in it also, because the valuation is not that high. They have a ton of money in cash. They're still continuing to grow their business. Microsoft is the same thing. I personally think people are more likely to go on the traditional route right now, especially at the institutional level, and just stick to buying things that, can survive a recession without too many issues. As an example, like utilities. Like, if you do get a recession, utilities are a perfect place to be because, let's say everyone loses, people are starting to lose their jobs. The one thing that people don't do is that the electricity doesn't get cut.
Yeah.
So same thing with right now. If you look at the companies that are up today, right? So let's take a look. Realty Income, right? That is up today.
Verizon
is up today. Let's see. CCI, which is Crown Castle, that's up today. MAA, which is Apartment REIT, that is up today. So all the things that are critical to people, those things are going to be up. Even So my thing is, from a portfolio positioning standpoint, we have to just look at the market and say, okay, where do we see the most opportunity for not only positive returns, but also at the same time for safety. Some people are saying, well, you know what, maybe it's a good idea to buy TLT and just stay in treasuries or stay in cash. That's another opportunity.
Yeah.
Because then you'll be well positioned to buy things when things are bottoming out. I personally think we're not anywhere near that crazy level of recession yet. I'm more like, hey, this is just the administration being reckless with their commentary, and basically the market's not appreciating it and then appreciating it and then not appreciating it. And it's just dragging a lot of volatility into the mix, which for, like I said, for traders, this is great. For people who are just looking to invest in the companies you like and just leave it and don't worry about the day-to-day BS.
Do you think we're in a bubble at all?
I think there's small bubbles in certain sectors and certain areas, but I don't think there's like a giant bubble that's just like waiting to burst, you know?
Yeah.
Like I said, there's the thing that I would say that I'm scared of, honestly, is shelter. Okay. And the reason why I'm scared of shelter, and I think I've said this more than a few times, people are creatures of, like, the mentality of a person is usually tied to their net worth, right? So people tend to spend when they feel like they're rich, or they feel like, hey, everything is good, right? Your job is secure. You feel good. Your property prices are higher. You feel good.
Right.
You know, those are the kinds of environments where people tend to spend. And that's when the economy does well. But then if, let's say, the price of your home goes down, or something major in your life changes, like you lose your job because you used to work at some kind of federal agency, right? Or your company had a contract with the federal government that just got cut by Doge. Now all of a sudden you're pulling back and you're saying, well, maybe I can't spend as extra cash that I'm not going to have. And that starts to have like a chain that tends to have like a chain effect, right? Because the more people start to lose their jobs, that's less goods and services that they're going to end up spending their excess capital on, you know, and then that causes secondary and tertiary effects. And that could end up leading to a major problem. So for me right now, when I see it, it's like China. Why did China slow down so much? Because their property sector collapsed, right?
Yeah.
We have an unaffordability crisis right now because the prices of homes have appreciated so much because of a lack of inventory, right? And the interest rates are high. So my thing is, if interest rates start coming down and inventory starts to jump up, and if you look at Florida right now, Florida is the epicenter of property problems, okay? And that could end up leading to some major, major issues downstream, especially if it happens to the rest of the country. So you've got that whole BS happening. Another thing is the impact of labor. Like right now with this illegal immigration thing, immigrants do go out there and they spend money. You know, they work jobs and they spend money. If these people don't do that, that ends up impacting earnings for a lot of companies. They're still, you know, buyers of goods and services, whether they're getting their money from the federal government or they're doing it from a job. So, like I said, we're in a point where disinflation may actually happen, but it's not the best way for it to happen. You typically want positive growth, especially like accelerated growth. Like Scott Bessent said, they want 3% GDP growth, while at the same time they want to get spending down as well. Like the deficit to only be 3%. Right now we're running hot deficit, and the majority of the reason why we're running a hot deficit right now is because of all the interest rates, the high interest rates. So we have to figure out how to tackle the high interest rates while at the same time not slowing the GDP down, which is going to be a very tricky thing to do. And like I said, it's going to come with a lot of volatility.
And if we don't, we get stagflation. So we got to figure it out.
Yeah.
Okay. Last.
We don't want to be like Japan and in the lost decade either.
Yeah.
You know.
Yeah, so, that would not make this the Roaring 20s for sure, if that's the case.
Yeah.
Okay. Last question, Chris. What are you doing with SMCI? Are you selling it, taking some profits? How are you?
Oh man, I'm holding. I'm waiting for the news. The news is.
Dude, you and Steve. I asked Steve last night. He's like, I'm holding. I'm waiting.
Yeah.
Like, all right.
I do have some near-term contracts that are like expiring in June that I may end up selling tomorrow, because then that leaves very little time for that report to come out, right? In which case now all of a sudden, if let's say these guys get another extension or some shit like that, and news comes out, that's it, bro. That's going back down to the fucking 30s.
Yeah, but do you really think they like? It's been 5 months. Do you think they would not file it by February 20th? Like, that would be unheard of, in my opinion.
I thought they would have done it today. I mean, it's 5 days from now.
Maybe they're just waiting for the last.
The 20th, yeah.
Yeah, I mean, that would be sad, dude, if they actually need another extension. That would be bad.
Yeah, that would be really bad, in which case, like, it's just, look, there's risks out there, okay? At this point, the closer we get to this thing, the more like it's almost like the risk is getting higher and higher. So right now, The question is that like filing already priced into the stock?
That's another thing. Yeah.
You know, so this is where you have to be a good judge of, like the risk and figure out like, hey, you want to risk being in a position where you are, or can you hedge, sell some of the gains that you have, use it and buy some near-term puts that are really, that I wouldn't say they're cheap because they're probably not cheap, but buy some puts. If they expire, they expire. But if your total return is super high on a binary event, you kind of want to just, hedge it out. So I don't know. Like that's the question I'm going to be asking myself all day today, and just looking at the markets, looking at some of the data that's coming out, seeing like, okay, what exactly is SMCI is planning to do? Because they're really cutting it fucking close, dude. I mean, this is like 5 days before you motherfuckers are gonna get like the expiration to delisting, and you still haven't put their fucking report out. Like,
wait, so you have leaps and you have 2025 June.
Yeah.
Yeah, I feel like the June ones, it's scarier to hold on to those, right?
Especially considering that I'm up like a ton on those. So my thing is, maybe it's a good idea just to take the money, pay the taxes on it, call it a day. You know what? Fuck it, I'm gonna do it right now.
I mean, look, here's the thing. I think if they release the freaking the 10K, my only fear is that the 10K is not as, either it's priced in already, or the 10K is not as consistent with what they've been saying, and then there's a little dip based on that. But no.
The 10K is going to say what they've been saying. The problem is, what are they actually going to file, right? Like, are they going to file for an extension? I'm telling you, if it's an extension, this market's going to not trust them. And dude, it's going to impact their business too, man. Like, why would you do that to yourself?
Well, I'm just confused. Like, they're a public company. Why is it taking so much time? That's where people are thinking, like, is this legit a fraud if it's taking this much time? What's going on, right? Like,
it means their auditor is probably not exactly like, hey, we're going to sign off. Because if the auditor said, we'll sign off today, there you go. It would have been signed today.
Oh, right. The auditor has to sign off. You're right.
He's also got a fucking meeting with Jensen today to do a keynote. So, like, the CEO of Supermicro. So it's like, like, you motherfucker, like, y'all motherfuckers need to, I hate when this happens, dude, but whatever.
Well, you made good money on it, so it is what it is.
Yeah.
All right, good stuff, Kris. Thank you. Kris, Twitter in the chat. We will talk to you later.
Later, dude. Take care.
Later. All right, so that is what Kris is doing with SMCI. Looks like he's taking some profits on that one. I don't know, bro. I mean, I that is weird that they still haven't released the 10K 5 days before. But who knows? Maybe they're just waiting till the last day. I'm not in the name anymore, so it doesn't really affect me. But if you're in the name, I guess you kind of just got to consider, do you take some off the table? Do you ride it through? This is what I was trying to tell Steve last night. I was like, Steve, you got your double. He bought it at 30. It's at 60. And like, you doubled. Like, and your options must be up 4x because of the double. So you won. And he was like, yeah, but I want to hold on. I was like, okay, so it's about ego then, right? It's not about money. It's about ego. And he's like, no, it's not about ego. I'm like, it's literally about ego at this point. like if you're holding on after a 4x on a trade, not an investment, it's just about ego. So I don't know. Steve said he's holding on. I'll see today if he still has that same opinion. And there's nothing wrong with having that ego. I just you got to admit, like, okay, it's about the ego. You just want to be right on the trade. But I think if you made good money in this, it's not a horrible thing to take profits here. Palantir 98.80. We have not hit the intraday low at 10.02 at 95.80, but we are not necessarily making a lot of progress holding above 100. So still red for the majority of equities here right now. Unity's up. Yeah, I'm not going to watch the Jensen keynote. That's at 1 p.m., so I won't be watching that. But we'll get some clips of that on the close. We'll have Jason on the close today, so we will get a bunch of technical analysis done today as well. We'll have money market funds as well, those inflows. Last week, we added about $5 billion, which is decent. I wonder this week if we decreased or increased. Still $6.92 trillion on the sidelines. How is it ego if you believe it will go up more? Because remember, Steve got into this as a trade. Like he got in, like when you double the stock and then you 4x the options, you've won the trade, right? Like at that point, like, yeah, could you be up more? Sure. But like, if that was the intention of the trade is to make a ton of money, you made a ton of money. So now wanting it to go to 70 or 80 to make more money, but to still hold on to a massive risk, which is like, if the thing is actually going to get there, to me is just about the ego of wanting to see it play through, which is okay. Like we all have egos when it comes to certain trades we make. I've had ego on plenty of trades, but it's like, if you won the trade, I mean, in my opinion, you won the trade. It is what it is. Tomorrow is Friday as well. Yeah. So we're probably going to get we're probably getting some volatility from options that are expiring tomorrow as well. Yeah, I mean, this might be a week where we definitely end red after about 5 weeks of consecutive green. I think there was maybe 1 week in January that was red, but after Trump got inaugurated, we pretty much have been green. Apple right here, 244, Baba 137, Microsoft 416, and then SMCI at 57 on the day. What else? You guys saying Carp is selling right now? I mean, maybe. Look, he filed to sell till 2025. I don't know if he's literally selling right now. I don't know if any of the insiders are selling right now, but it could be. But I don't think him selling is why we're down 12%. I think the market is like algos are selling everything. He could be selling into this, maybe, but it could just be algos selling off everything as well. Reddit really getting hit. It was at 230. Like when we say markets was frothy, Reddit was at almost 240. I think it was at 236. It topped out at last week. Now it's at 175. And like it deserves to be probably at 175, not at 236, right? Like that was almost 40 times price of sales. So that's what I mean by there was froth. And I think this is healthy to see some of that go away. Archer right here down 6%. Carnival Cruise down 10%. Nubank as well down about 0.5% right here. Yeah, Reddit was at like a $40 billion valuation. Now it's chilling out. SoFi is 1525. SoFi's down. Where's Rocket Lab? Rocket Lab 2404, down 7.3. I think we got to wait a day, dude. I think for selling puts, buying the dip, I think we got to wait another day. We got to see how this plays out tomorrow. Like this is the first day of real red. Yesterday at 3:45, we got a taste of it, but today we're really feeling it. And we got to see if this is a trend over the next coming weeks, because again, historically, February tends to suck at the second half of February, or if this easily gets bought up. And I just don't have enough faith that it easily gets bought up. I just don't think there's that much appetite. I think there is a bit of exhaustion that we have going on from buyers. Even Robinhood, look at that, 55.55. It hit 54.77 at one point. Wow. I mean, like pretty much giving up all of the earnings pump that we had. XYZ earnings. Yeah, we're going to be covering that today. I'll be covering XYZ earnings. Today after the bell, we have Square. We actually have a bunch of companies. We have Square, Nubank, Celsius, Rivian, Mercado Libre, Coca-Cola, Dropbox, Texas Roadhouse. So we have a decent amount of companies today to look at. And then NVIDIA next week, and then we're really done. After NVIDIA, we are pretty much done. Yeah, the S&P is not really down. No, I agree with you. The S&P is barely off all-time highs. It's just a lot of these stocks, S&P down almost 1% of the day. A lot of these stocks are down 10 to 15% as they were a bit more high beta than the S&P. But the broader market is not really. That's what I'm saying. Until the market falls 5%, you know, like individual stocks or whatever, but markets are not really falling. Individual stocks are, though. And so until we get a real pullback on the S&P or the NASDAQ, it's not as bad when it comes to volatility. Thoughts on APLD? So I don't have any thoughts on Applied Digital. I know NVIDIA invested in them. A lot of you guys like it because of that. I just don't have any thoughts, dude. It's a $2 billion company, small cap. Like, yeah, NVIDIA invested in them. That's cool. But I think a lot of people using that thesis is just not the right thesis. SoundHound, NVIDIA invested in as well. That's down basically 50% because NVIDIA took out their investment. So I don't know if that's the best argument for a lot of these names. The Dow is down 1%. Yeah, the Dow is down 1%. Broadcom is down a bit today. Broadcom's down 2%. Where are all the semis? Broadcom is still up almost 40% from October. So that one has done very well. TSM's down 2%. Qualcomm's down 1%. Intel down 2%. SMCI down 5%. AMD down 1%. NVIDIA down 1%. Dell down 2%. Micron down 1%. ARM down 3%. And then Marvell right here down 3% as well. Hood is strange, though. Volatility is supposed to be good for them. So volatility is good for them on their earnings because they can show more like trading volumes. But in general, volatility is not good for the stock because Hood is a proxy on a bull market. And if we're having, this is not a bear market, but if we're having bearish days, then Hood will reflect that as well. Now, granted, that's good for their trading volumes. It's just not good overall for how the perception of the stock is. The one reason it's bad for Hood, though, is that their AUC goes down, their assets under custody. And if people sell and take money out of Hood because they're scared, that decreases net deposits. So there's definitely an argument for why a sell-off in the broader market is not the best thing for Hood's core business. Buffett did sell his entire S&P position. That is correct. Buffett has sold all of his S&P 500. Now, he still has about $250 billion in stocks, but he has $300 billion in cash. So he had a ton of VOO, a ton of S&P, and he sold pretty much all of that. They sold 95 million Bank of America shares, 40 million of Citigroup, which is about 2.4 billion. And then all of his S&P ETFs, he also sold. Here's the picture right here on the sell. He had 39,000 shares of the S&P, 43,000 shares of the VOO. So he sold 100% of that. And then he sold 100% of his Ulta Beauty as well. So, I mean, you either interpret that as like Buffett's bearish on the broader market, but he's also buying other names, right? So he's not really just bearish on stocks. Or you interpret that as he doesn't think there's a lot of upside in the S&P. He thinks there's more upside in individual names. And so, I don't know. But also, the S&P was this tiny part of his overall portfolio. So it's not like, you know, he's not like liquidating the biggest stakes. Now, if he sold his 30 million shares or 300 million shares of Apple, that's when I would say, all right, he's like legit getting ready for some real pain. But he didn't touch the Apple position, which I was shocked by. Like the fact that he didn't touch the Apple position, I was like, all right, I guess he still sees some value in holding on to some level of tech as well. Yeah, it was 0.01%. So, I mean, you could read into it and say it's bearish, but you could also read into it and say it's just not that much of his portfolio. What else? What else do we have? What other headlines do we have right now? I mean, outside of the volatility, I don't think there's anything too crazy. We talked about the whole Doge dividend thing. What else? Yeah, I think that's it. I don't think there's anything too crazy. Boeing just said Elon Musk is helping us a lot. Oh, but Elon was with Trump on Air Force One yesterday. So they were flying together and working. Ray says, my portfolio hasn't been down here since 10 days ago. Yeah, it's back to last week. Let's actually get some coverage on Walmart because I know that one was a big thing Kris was thinking about when it came to their earnings. So let me pull that up right here. Get a bit of coverage on how some of these analysts are thinking about Walmart.
Immune from looming tariffs on Mexico and Canada, even though the majority of its goods are sourced in the U.S., stock down about almost 7% now.
As a look at Walmart, Mike, as you've been mentioning, I think Bespoke this morning said it's only gapped down 5% or more on earnings a few times since going public, or at least since the early 2000s.
It's kind of been in rare airspace. I think before this, many people mentioning it has been this kind of consensus momentum trade, well extended above, let's say its 50-day average, which is only in the 95s. So keep in mind, it looks like a stiff pullback, but it was kind of in this can't disappoint on any front type of zone. And that's what's going on in this market today. A lot of the big leaders, the Palantirs, Walmart, all week it's been Robinhood down, AppLovin. And so you're starting to see some of the starts come out of really a lot of the kind of go-go parts of this market. Now, one hallmark of this tape has been very elegant rotation, just harmonious, passing the baton. And we have some slippage here today, as you have a little bit, I think, of a sense out there that we're sensitive to any sign that the economy might just decelerate somewhat.
Right. It's either that or, I mean, it's not out of the question to draw some geopolitical news from the tape. There's the multiple wires now saying that a news conference between Zelensky and the president's Ukraine envoy has now been canceled at the United States request. That's according to a Kyiv official. Certainly this was part of the dynamic yesterday.
Yes, and it's been this very kind of high noise environment on the news front. Market's struggling to figure out what it needs to try and discount and what it doesn't. And what it does mean is that there's plenty of ready excuses to just take risks and down if you feel like you need to do that, because we have had this decent run, and we'll see how it does play from there. Let's get to the street reaction to Walmart's latest results and commentary. Joining us is Michael Lasser from UBS. He has a buy rating on Walmart with a $113 share price target. Michael, it's good to see you. Fill in the blanks of versus what we've said already in terms of what you saw in the quarter and how you're thinking about Walmart's guidance from here.
Thanks, Mike. Good to see you. How we're thinking about Walmart's quarter is really, if you look below the headlines, it provided a lot of evidence to support the bull case. It's 4.6% same-store sales increase in the U.S., while slightly below the whisper expectation of greater than 5, was still very good and will look best in class as we get through the heart of retail reporting season. Second, it generated $500 million, $500 million of incremental operating income in the quarter. Half of that was from these alternative revenue streams like advertising, membership fee incomes. Walmart's still very much in the early innings of harvesting those benefits and experiencing a transformation in its model as a result. And third, I think you are absolutely right. The guidance did look a little bit below the street. But with that being said, I think it just simply sets it up for consistent outperformance over the course of the year. If I'm sitting at home, I'm looking at this pullback as an opportunity to get involved with a really multi-generational story that is compelling here.
I mean, it certainly would, I guess, be an opportunity versus yesterday, but the stock is just back to where it was a month ago or so. And I know your price target of 113. I mean, it still contemplates Walmart kind of building to this mid-30s type PE as a steady state. I mean, is that basically where you see things heading?
Yeah, so your question is probably why would that type of valuation be warranted?
Yeah.
And our argument would be twofold. One, the growth profile of this business is higher than it's been historically. It's going to generate high single-digit, low double-digit EPS growth for the foreseeable future by really this transformation in the model. And two, that is coming with a lower risk profile than it has historically. So the equity risk premium embedded in Walmart stock is lower. That translates to a higher multiple. So it's really those two factors that are driving this higher multiple, and we think it's warranted and will persist, and the stock can grow with earnings growth as a result.
Michael, do you expect as we move into retail earnings season, other companies' guidance to be as cautionary?
I do, Carl. I think it's going to be a story where the last several weeks have been a bit more volatile within the retail sector. Companies are going to want to take a more cautious approach as a result. There's obviously a lot of uncertainty on the horizon. It simply would be prudent to embed some degree of conservatism in the outlook to ensure that these companies are delivering on what they say they're going to do this year.
You know, if that's the case, and probably makes sense that managements are not going to be too specific in terms of what they're building in the way of assumptions when it comes to things like tariff policies, is the market doing the same, essentially sort of reserving judgment, or in your mind, has the market rushed to kind of penalize those companies more vulnerable or give benefit to those that are more immune?
by and large, the market is saying we think the risk from tariffs is manageable. This is going to come from a combination of pushing back on vendors, changing domiciles of production, and when all else fails, passing along the tariffs in the form of higher price. That is the playbook that retailers are going to use. We think that's what they'll embed into their outlooks for this year. There is some degree of a penalty driven into some stocks that are disproportionately impacted by tariffs, those who have either exposure to lower income demographics that are going to be more adversely impacted by this tax on the consumer, or those who have a disproportionate amount of their sourcing from overseas.
So kind of the same argument Kris was making about tariffs right here. Ultimately, it's going to be a question of how this affects the consumer. Walmart's showing some guidance that it could affect the consumer, and the street reacting a bit negatively towards that across the entire market. Apple right here, 246. Palantir still down 12%. SMCI down 4%. Hoodie down 7%. Broadcom down 2%. Reddit down 7%. Nvidia down 1%. Grab down 8%. Tesla down 3%. Baba up 9%. The Qs down about 1%. Look, I think it's healthy, man. I think it's healthy. I just don't think it's that big of a deal. Consolidation and pullbacks from stocks being up 60% year to date to being up 45% year to date is it's just not that big of a deal. It really is just not that big of a deal. Not in my opinion. Daniel, thank you for the €1 super chat. Appreciate you, Daniel. Thank you for that. Sagar, thank you for becoming a channel member as well. And Oris, thank you for the $5 super chat. Palantir, rule of 40 versus PE, future PE, thoughts on a new purchasing paradigm. Yeah, I think, the rule of 40 stuff that Palantir does is really interesting because obviously they're beating the rule of 40 very well. It's just some of the Palantir bears say the rule of 40 could be green or be like rule of 81 for them, but their forward PE is too high. So it's a question of comparing how you think of their future growth prospects to their gross margins, where the podcast I did with Amir over the weekend, he has Palantir's free cash flow margins growing at 60% over the next decade, which right now they are at 60%, and they have been for the past 3 quarters. If we have 40% top line growth and 60% free cash flow margins, you can justify $100 today if you work backwards in a DCF. The question is just, can we pull up that growth, right? And I think that's what the market's going to have to see over the next coming years for Palantir. Palantir right now, 98. Forward PE is now 316. So that's down from like 450. And price to sales is at 80, down from 100. So still pretty aggressive metrics, but not as aggressive as they were yesterday. All right, cool. I think that is it for me, guys. I will be back on the market close. Nothing too crazy other than some of the red that we're seeing across the broader market. Again, my take on this is that I'm not buying the dip yet. Not really that eager to get into this dip. I kind of want to see how it plays out. End of February tends to be a little red. Maybe we can get some better deals. I mean, if Hood's giving us 55, they might as well give us 50, and we'll see if it can get there. But also, I think this is very healthy. We've had a lot of green. It is okay to have a pullback. Palantir was 60 at the beginning of the year, got to 125, now it's at 98. Hood was 34, got to 65, now it's at 55. Like, these are just not things that even SMCI, dude, it's at 55, it was at 25. So it's like, it's just not stuff that I think is relatively unhealthy. And the S&P 500 right here, officially down about 1% on the day, which is holding up relatively strong compared to some of these other names as well. All right, cool. That is it for me. Market close. We will have tons of earnings. Nubank, Celsius, Rivian, Mercado Libre, Block, otherwise known as XYZ, Dropbox, and then Coca-Cola and Texas Roadhouse. So we've got tons of earnings today. Jason will be on today, so it'll be a long market close. We will have a ton of TA with Jason, and we'll keep going from there. Jeremy says, grateful for the live, bro. First time hanging out. Good luck, everyone. Dips are all right. Thank you, Jeremy, for being here. And thank you for everyone who is new to the streams. We do this every single day, morning and open, and hopefully get through the ups and downs as a community. Word of the day is IWIS.
IWIS.
Of course. Who else would say a 4-letter word wrong other than me? IWIS. Have you heard this word before? Iwis, certainly. Iwis, the cat will try to knock that vase over again. The team will bounce back from this loss. Iwis, because they always do. No one has ever said this word in a sentence before, bro. Who says Iwis, the cat will try to knock that vase over again? Like, it means certainly, but no one has ever used Iwis as a replacement for the word certainly. Like, Iwis, the market will bounce back. Yeah, hopefully, dude. Iwis, what a weird word, bro. I feel like I'll remember this one though. I can use it, certainly. Iwis. It's like a fancy way of saying surely, right? Yeah, it's like you have your pinky up while you're drinking a glass of wine or something, and you're saying Iwis or something as you try to agree by saying certainly instead. The market Iwis went south. Yes, exactly. It's better than stayed. Yes, it's way better than stayed from yesterday. Way better than that. Iwis. Interesting. You don't drink wine. That's correct. I do like white wine. I do like. Oh, it was so funny, dude. Did I tell you guys at the Palo Alto meetup? Someone was like, "Yo, can I buy you a drink? Like, let me buy you a drink." And he was like, "What do you want?" And I was like, and I was talking for like 3 hours, so I actually was like, "All right, dude, please, like, you can buy me a drink because I'm really thirsty right now. I've just like been talking for so long." And I was like, "Can you get me a Shirley Temple?" He started laughing. He's like, "You're really not gonna drink?" I was like, "Dude, I really like Shirley Temples. Like, I don't need any tequila or anything like that." Oh, I did have a shot of tequila though. Someone else got me a shot too. So we had one shot, but we had some Shirley Temple. Yeah, white wine and Shirley Temples, bro. That's how I roll. And Jaeger bombs. That's how I roll. All right, cool. So yes, Technical Thursday will be today. Jason will be on, and we'll try to see his buy or sell targets on some of these stocks that took a little bit of a dip today here as well. All right, cool stuff. Thank you everybody for being here. We will be back on the market close, and we'll see how this market ends up turning out throughout the rest of the day. All right. Bye, everyone. Have a good one. See you later.